didn't overpay for the stuff. Like, I think the biggest problem is not the projects. I think
what's up, everybody? You can hear right here, we're listening to the Richard Hart Twitter space going on right now. It's pretty funny. They're having this like live pitching of your project, and Richard is on the panel. I think it's Richard and Tone Vase, if I heard it right. And I think this first project that's being pitched right now, it's a NFT that lets you sit in some specific airport lounge. It's just funny to hear Richard's reactions. Let's hear what's going on.
I have concerns with
I agree with you, bro. 100%.
And another thing to point out is the fact that, we aren't on that sort of hype trend, and really we don't believe in it either. We take 0% royalties for that exact reason. We're not wanting people to flip it and trade it for that reason.
I would like 0% royalties.
We want a trustworthy base of people who want to stay with Etihad and believe in the community, and it just seems so much better to us. Sorry, I should introduce myself here. I'm Marvin from R-Cube. R-Cube is the company running it for Etihad, the collection. So yeah.
The only thing I might mention is I wouldn't be surprised if one day these NFTs did lose their rights, just like people that bought online movies. If you bought movies from like PlayStation, they just cancel all your movies. They don't even care. They're like, yeah, the movies you bought, you can't watch them anymore. It's over.
Good point. Like when with those centralized companies, you remember when I can't remember which airlines it was, Richard. To raise money decades ago, they created a unlimited access to first class for one fee of like 200, 300K. And then I don't know if you've heard the story, read the story, and then people bought it, abused the fuck out of it, and it's unlimited, it's forever. But they were desperate for money, and people are still using it today. And the airline tried to cancel it. American Airlines,
yeah. I read the story about the guy that abused it, and he should have had it terminated. Like he was being unfair to the company, truthfully. And the other thing I would say is like in general, companies really don't care what you have to say at all. And usually the customers' suggestions suck. So like I wouldn't put too much faith in them really caring about, like, you either have this NFT or you don't. You're probably going to get treated the same as the normal comments box, if they even have a comments box anymore. Used to be businesses would have a little box where you could put suggestions. I haven't even seen one of those in a long time.
I think, actually, to better answer your questions, if we have time, sorry to say, Simon should be here from Etihad, the head of marketing, global head of marketing for Etihad, if you have any more questions for him. I don't know. Is he actually, is Simon there? Yeah, he should be.
This is what we're listening to right now.
If he's not already. Oh, nice. I can't see. If I see, it'll be good to get. I want to ask him a question. Etihad, like, what does the board think of this? But we'll go to the next pitch. I think it's a great pitch, guys. The pitch was actually pretty mediocre, but the project is pretty cool. I would have asked you guys to give us some NFTs to cover.
Talk about NFTs that get you into an airport lounge.
I'm in Dubai, not Abu Dhabi.
And Richard's reaction is exactly what you think it would be.
So we've just put a poll up for everyone in the audience. This is the first of two pitches. Check the poll and vote whether you like the project or not. 89% love it, which is well above the threshold.
Shit, we should have got on. I wonder what Richard knows about Team and the Perpetuals. He knows about Maxi. He's talked about it before. And I wonder what he would think about Team and the Perpetuals. I think he would like that it's kind of like bringing back the referral bonus from the original Hex launch. But I doubt he'd promote, maybe he'd promote the Perpetuals, but I don't really think he would promote Team, because, the Perpetuals are, fully Hex backed stake pools, but Perpetuals, kind of different. He may call it a duct taped on token, but you know what, we are, everyone here knows exactly what the purpose of Team is, and we know it's a growth engine for Hex. So who knows, maybe he would have positive things to say about Team. Let's listen.
Mike is yours. Go ahead.
This next page.
My name is Mauro. I'm the CEO and the founder of Open Game Builder. We're a company from Spain. We are making the fifth platform in the world based for games on real assets connected with eSports. We have two MVPs right now. We have one game fighter 1 versus 1, like Mortal Kombat, for example, connected with eSports. And we have the second MVP is the Quantum Collection Metaverse. We are making the first collection in the world. We have the most complete collection from fossils, minerals, and meteorites. And we are making the digitalization of these pieces. And
see, sometimes when I hear like that was stupid. When I hear these NFT things going on, it's like it's like the people talking about them, like they sound so serious, but then when you just like think about what it is, it's just like we're just like us here in our community. We are just so far above and beyond the sophistication and the seriousness than some of these, just all the bullshit that people build. Like, it's like, how could you possibly be like thrilled about like, oh, we're going to build NFTs that plug into video games? Like, it's like, what positive force for the world are you creating with that? Whereas with the stuff that we're building here with Team and Maximus, like this is serious financial innovation that we're doing here. And that has a massive global impact in a serious way where, we can really empower people with their personal savings and their personal finance. And that's like a big problem. That's like a big initiative to undertake. And so when I hear people that are just building just like dumb shit, I'm just like, how can you possibly be just like, passionate and motivated to be making that stuff? Like maybe there's some financial opportunity, but even the financial opportunity doesn't seem very big. So let's hear if Richard's talking about that, whatever bullshit that was.
We're a company and we are making our main work is make the transition of big name companies into the metaverse. For example, in Formula One, we have our partner Campos Racing from Spain, and they have a collection from cars like the first car.
All right, it's so funny to hear people talk about the metaverse. So if you guys remember one of my tweet the other day, so before Hex, Goldkey and I, we used to we worked on a couple different startups. One was one that we started. It was a virtual reality 3D camera and like a VR social media app that we had built and launched. It was the first mobile VR social media app on iPhone. And it was this awesome thing that plugged in. We had these little VR lenses that clipped onto your phone. And then we had a 3D camera that captured VR content. And it was just like truly amazing, an amazing thing. And it's so funny because that was 2015. 2015 and 2016 is when we launched it. And then 2017 is when we started our company. And that's what ended up getting us into crypto was the funding that we got for that startup came in from this crypto company. But then it's just so funny how like back then we were taught, there was like a VR hype cycle kind of before the crypto hype cycle, which really, I mean, like all the people that were in the VR space kind of switch, I mean, look at us, a lot of people switched over from that VR space to the crypto space. And it's so funny to like hear people talk about the metaverse with such like a serious tone. And it's just like where they say it like in such a matter of fact way where it's really just like so dumb that, it's all like when people talk about metaverse, all they're talking about is just like a different user interface for interacting with web applications, so we're like right now, the main interface that we use is either on a, computer or laptop or on your smartphone where you're tapping around. And then they talk about, they're like, oh, we're bringing companies into the metaverse. And it's like, okay, what the companies are already in the metaverse. Like the metaverse is just like a user interface and all the high value stuff is already there. And then the metaverse is just a harder, more cumbersome, more annoying, higher friction user interface. Like there's actually very little benefit to being in a virtual world. Like honestly, the only, so, I'm, my background is in before all the crypto stuff, I was doing, like I studied optical engineering in college. So like optics is lenses, lasers, camera systems. And so the area that I specialized in was 3D cameras and 3D imaging. I was doing, some like defense and medical applications first, but then I got into, VR imaging. And so that's what led me into building that, VR camera and like 3D content viewing app for VR. And so what's funny is that, like I would consider myself like a technical expert in VR space. And I'm not even kidding you. The number one app, the number one killer application in VR, I shit you not, is virtual golf. Like, honestly, Meta should get rid of all the apps, get rid of the whole interface, just turn their Oculus device into a golf device. Because like, this is actually awesome. So as far as of everything that I've seen, you know, because I was deep in the space for years. Everything that I know about it, so far, the only good app I've ever seen, other than ours was awesome, but it was just like, you know, there's no demand. No one wanted to create VR content. But maybe when Apple releases like a sleek pair of glasses, maybe we'll relaunch that. But the only good application of VR is golf. Like, I'm not even kidding. Like, it's pretty awesome. You know, it's just like getting this golf handle adapter for the controller. Like, golf is actually like a good, like, if you think of the mode of use of VR, like when stuff's moving all around you, you can get kind of dizzy. But with golf, it's very stationary. And so that just like makes it so that like the annoyance of wearing the device isn't so bad. You can really only play for like maybe 30 minutes at a time, or else you get, even that's a stretch. Like, but it's so funny to just hear all these noobs talk about like, oh, we're bringing this into the metaverse. And it's just like, okay, the only good use of the metaverse is golf. So it's like, what, you know, what, like bringing companies into the metaverse. It's like, there's like a hype cycle now purely because Facebook changed their name to Meta. Everyone just like, it's like, oh, metaverse, like new hype word that we can try to grift on. And then now, you know, it's just like, there's like a whole new wave of noobs that are like, oh, we're going to like, imagine if you could be in this space with all your favorite influencers and brands. And it's just like, okay, just like they're going to try to just sell you more bullshit. And then you're all it's going to be is that the user interface is worse because you now have to wear a freaking, you have to, oh, come join our metaverse, come buy our products. Okay, let me put on this. Like no, it's literally fucking stupid. But golf is fun. Golf in VR is actually an awesome experience, and that's really the only thing that's good. So let's see if they're still talking about.
So we are making like all the game and all the NFT collection of his museum in Valencia. They have a big museum of a lot of stuff in golf scene. So we want to include. All
right, this panel that Richard's on is pretty lame. All they're talking about is bullshit. So let's just get into what we came here for. We're going to be getting ready for the upcoming launch of Team and the Perpetuals. We've actually had two, you know, we have two kind of testnet versions right now. I mean, they're the same thing, but I was just testing some stuff on the user interface and optimizing it. So so far where we're at with the with testnet, we have successfully did like we've done, I mean, so across both of them, we've done successful team minting. So our people were able to mint their team during the allotted time period. And then we had a successful staking sequence. So people were able to stake their team. And then we went through one full base stake on that first test. And people were able to redeem their Hedron rewards. The only issue with that test stake was that the hex rewards were so small that we were unable to the number of hex per team staked was smaller than the smallest divisible unit. So we were unable to, you know, so Solidity treated it like it was zero. So, you know, in the real world, that won't be an issue. And so that was kind of the only hang up there, but all the math and everything, you know, works out just as expected. And so we did a successful full base stake. So we did a base stake and then the stake ended and there was the reload. So then now the second, you know, cycle of the base stake began. We ended the trio stake and then the trio new stake starts here in the next day or two. So the testnet phase is moving along just fine. People were able to successfully mint their team. They were able to successfully stake and early end stake and roll forward and do all that from their team. They're able to claim their rewards. And then for the perpetuals, people were able to they were able to mint their perpetual tokens with Hex. They're able to redeem. The staking and unstaking worked fine. The redemption rate update worked just fine. So everything's looking good. So and the front ends are working just fine. There's really just like a couple more aesthetic things that I want to finish up. But overall, pretty much where we're at is that as soon as the audit gets back, so long as there's nothing that big that we need to fix, if that's all good to go, then it'll be go time. So they said that the audit was supposed to get back on the 28th. Today, when I was talking to them, they said that it's taking a little bit longer than what they said, but they're going to try to meet that deadline. This one's taking a little bit longer than the Maxi audit because the whole team staking, with the team contract, there's the part that deploys the pools, there's the part that deploys the mystery box, there's the part that deploys that escrow, and then there's the whole staking, apparatus. The minting part's very simple, so that's not that big of a deal, but the whole staking system, so there's some complexity there that's more complex than the original Maxi contract, which they audited. And then in addition to that, there's the whole perpetual pools contract, which is just, it's just like the Maxi contract, but the only difference is that there's the roll forward mechanism where, the stake resets and then it, rolls forward into the next one. And then also the component that calculates the amount of yield that came from bigger pays better bonus, and then sends it to the team contract. So there's a little bit more complexity on that. So that's what they're going through. Hoping it gets back on the 28th. They were kind of saying that perhaps it may take a day or two longer. But we just gotta get ready and keep it moving. And then, so as soon as that's ready, that all the front ends and stuff are already ready. And so as soon as that's ready to go, we're getting right after it. We want to get these pools, because every day that goes by where people are not staking through these pools, hexagons are basically just wasting money, just giving money away. So I'm really urgently trying to get these perpetual pools launched, because every day that goes by where people are staking solo, I just cringe at, okay, that's just future sell pressure on the hex or future reduced buy pressure, because rather than buying more hex, those people have to save up for gas, especially on those long-term stakes. You're really going to need a lot of gas. And so I'm pretty urgent at saving people from these high gas fees. So yeah, we're trying to get this rolled out ASAP. Let's see what's up in the chat. Go ahead and share the link. And also, if you guys have any questions, I'd love to, get those answered. Warden You says, what's up? Name, my brother, what's up? Name, you should get on a stream sometime. You're such a legend in the Maximus community. We should get on a stream. We've only talked, I guess, in voice chat. We've talked before, like on one of those live chat things. But you should hop on a stream sometime. Warden You, referrals, say more. Yeah. So when I was talking about referrals, since Team is incentivized to grow the size of the stake pools, and stake pools are just like a really awesome way to onboard people. It's like a new avenue to onboarding people to Hex, where the value proposition is, all the things about Hex that we love, including gas fee savings, amplified earnings, and instant liquidity. So it creates a brand new sales pitch for Hex. And so since Team is incentivized to grow those pools, it's kind of like an indirect referral system where team members may be incentivized to, because there's all the people that are in Hex already that is like an immediately addressable market, but then that next segment of the addressable market is people that are new to Hex. And so the team members may be highly incentivized to be onboarding new people into Hex via the pools. And so, and then because the larger those pools grow, the more that Team earns. and the smaller they are, the less team earns. So there's that, incentive there that kind of acts like a referral bonus. And if for the people that are new to Hex, in the first year, there was this referral system built into the contract where if your address was linked as the refer address to any person who minted Hex through the adoption amplifier, you got like some portion of it. At the beginning, it seemed really small, but then it grew into a huge amount. So a lot of people made a ton of money on the referrals. And so, the team contract, because it has that growth incentive baked in, it's kind of like another referral system. More Hex is a big difference. Oh yeah, I think at that time we were talking about how the Hex skins are like very serious about like financial innovation. We're putting forth these like awesome products, and we were just listening to that live stream reaction. We were just doing that reaction, that live Twitter space where they're having people pitch their NFT ideas, and Richard's just on the panel, and like just the dumb shit they're talking about. Airport lounge entry with the NFT, some video game NFT, and metaverse NFT. Like we're just talking about dumb shit. So and so Dipcatcher not impressed. Yeah, I mean, that stuff sounds cool for like beginners, but I mean the Hex skins, it really does self-select for a really advanced type of crypto user. And so I think that's why Hex skins just really aren't into bullshit. DCR, what's up? Get some. So stake Maxi for team. After 1 year, get Maxi back. Plus what else? More Maxi. Okay, so you don't stake your Maxi for team. You use your Maxi to mint team. And then when you mint your team with Maxi, that Maxi is no longer your money. The team is now your money. But during years 3, 6, and 9, there's something called the 369 Maxi Rebate, where 30% of the total Maxi that is used to mint team is then redistributed back to team stakers. So in year 5 or in year 3, 5% of that total Maxi is simply sent to the team staker contract. Then in year 6, 10% of it is, and then in year 9, 15% of it is. So if you're a team staker, you can reclaim that Maxi, and then the amount that you get back is purely based on the on what percent of the team supply is staked. And so if it's a low staking percentage, meaning, so we might expect to see low staking percentages on team if the team price is running, kind of like in Hex. I mean, other than just like the OA not staking is like a marketing incentive, to boost the earnings for everyone else. When price is running, you're a little bit less incentivized to stake because you're getting gains just from the price appreciation alone. So if we see the team price running, we may see low stake rates, and low stake rates means higher payouts across the board from all the staker rewards. One of them being that Maxi 369 rebate. So if the way the math works out is that if 100% of the total team supply is staked, including the mystery box, then all the team stakers will get back across those years 0.15 Maxi, so 15% of the Maxi that went in. But if say only 1%, say 1% of the mystery box, and then 1% of everyone else stakes, so basically no staking at all, then each person that does stake their team, they're getting back 15 Maxi per team. So low stake rate on team means high payouts. High stake rate on team means lower payouts. And so, whatever those stake, it's just like Hex. If everyone was staking the Hex, that APY would be low. If no one's staking Hex, APY is high. And that's just kind of like how that Maxi reward happens from that 369 rebate. Ms. Rigo asks, let's say we stake team. Do these rewards appear automatic in our wallet, or do we have to claim the DApp? Yep. There's a on the team rewards dashboard, or on the team staking dashboard. When you go to, there's a section for managing your stake. It'll show you which periods you staked for, how much team you staked during that periods, and it'll show you how many tokens you can redeem, from the supported list. So there's Hex, Hedron, Maxi, all the perpetuals, and team. So if someone accidentally sent team to the team contract, it gets split up amongst the team stakers. So don't do that unless you want to. Or if someone builds some smart contract that somehow drives income for team stakers and they want to make it so the income comes in team, you can just simply send team to the team contract. But to claim those rewards, you have to go in and deliberately claim for each token, because on blockchains, nothing happens automatically. And so every action needs to be deliberately performed. So, likewise with the team staker rewards, you have to go in and claim them in the dApp, but it's really easy to do. And it's very low gas to do that. Gotcha. Thanks for explaining. Nick Alexander asks, if I mint team and stake it, do I have to remember to renew the stake at all? Thanks. Yes. So in order to prevent dead people or inactive addresses from, sucking up all the team staker rewards, we made it so that the stakes only last 1 year. So every year you have to renew the stake, but you don't have to remember within a tight time period. Just any time during the current year, you can roll your stake into the next year. So you do have to renew your stakes, and that is to prevent, just like dead people from eating up all the rewards. Because remember, the whole point of team is to be a growth engine for the perpetuals. And so we only want people to be earning team rewards if they're active in the ecosystem. And so the way that you prove that you're active in the ecosystem is just by renewing your stake every year. And so, yes, you do have to renew your stake. Get some says, okay, got it. Thanks. Yep. Are you not entertained? Yeah, it's going to be wild. Holla. I see. Thank you. Ooh, RV is saying Lucky and Trio. I love Lucky and Trio. That's such an awesome combo there, because those, like with Lucky or with Trio, because it's every 3 years, and because in general the crypto cycles, these like macro crypto cycles run every 4 years. That Trio stake is going to be ending once per cycle. And because it's a little bit shorter than what we know these crypto cycles to be, and especially if these crypto cycles lengthen, like some people think they will, then these Trio stakes are ending at different points in that phase. So, during certain cycles, we may see the Trio stake ending at the very Pico market peak, whereas other cycles, we may see it ending in a bear market. And so, because it's ending in that 3 year period, and you can always sell your Trio, but at the end of the stake, you're guaranteed to be able to redeem all the hex that it's worth. So, because of that high certainty that you're able to get hex deliverable to your address every 3 years, combined with like these kind of like 4 year market cycles in the broader crypto space, I think people Trio seems to be more of like a speculative one, where people who are interested in trying to time markets, I think they're going to be honing in on Trio. And then Lucky, it's kind of like that, but just extended, where once every 2 cycles you're getting the Lucky, your Lucky stake ending, you're earning so a 7 year stake is earning 140% longer pays better bonus. So Lucky, earning at a pretty high rate, almost, it's very close to the 200% bonus from longer pays better that Deci gets. But also Lucky's cool because it ends with, maybe timing up, every other crypto macro cycle. But also Lucky, so if we launch now and Lucky is ending in 7 years, all the people in the first year of Hex that have Genesis stakes, where a lot of people, like if you look at the Hex stake chart, you'll see that a lot of people stake 10 years and a lot of people stake 15 years. There's like these bumps every year around the launch, because the launch also coincides with big payday timeframe. So you see these big peaks at the end of each calendar year, and then at year 10 you see a big spike, and then you see kind of smaller peaks at 11, 12, 13, 14, then another big one at 15. So the Lucky stake ends before this big a big spike in end stakes from just the first year Hex launch 10-year stakes. So there may be some, so I think people that may want to try to front run that big wave of hex stakes coming online at year 10, lucky may be a good option for those people. And then also, especially in those longer stakes, because by then there's going to be these stakes ending that are about 10 years old. A lot of those, even the 10-year-old stakes, may be massively expensive to end with gas, and so the more stakes that are infeasible to end, the more bullish it is for the hex price, because it does two things. One, supply that the market was factoring in that was going to become liquid is now rendered, illiquid. It's basically just punted forward and redistributed into the existing stakers, from that late end stake penalty. So if there's a lot of stakes that are infeasible to end, that's really bullish for the price. And two, all this, because there's a big bundle of these stakes that were happening a lot of the time, a lot of the staking activity from early on was under the assumption that gas fees would always be low, but then we saw gas fees go up a lot. And so people's staking activities kind of changed. And so a lot of individual stakes ending at that 10-year time frame, there's going to be a ton of competition for that block space. And so all the hex stake, kind of like when there's an NFT launch, there's a lot of competition for the block space to get your mint in before someone else does. There's probably going to be a lot of competition on those blocks, centered around times where a lot of big stake, or not a lot of big stakes, but just a lot of stakes in general are ending. And so we may see massive gas prices as a result of the hex stakers, and anyone who's in a pool is just going to be laughing straight to the bank, because rather than, say there's 10,000 people in the lucky stake, those 10,000 people, their gas is covered by a single transaction. So they only have to pay gas once. Whereas 10,000 other people that staked individually, they're all paying the same gas to do the same interest calculation. And so it's going to be very competitive. And so a lot of these long-term stakers, it really sucks, especially people where they take $100 out of their paycheck and then punt it forward, where they just stake $100 for 10 years. Those people may be wrecked, and it may be really bad, and it's bullish for the hex price, but really bad for that person's experience. But that's why we built these pools. And then the people that participate in the pools, they're gonna have no problem ending their stakes. Everyone else may not have such an issue. And so that could be really profitable for stakes that end a little bit before a big wave of stakes ending, because on one hand, more liquid supply is going to be coming online, but also because a lot of those stakes aren't going to be coming online. And so that's bullish for the hex price. And then if you have your liquid hex after your lucky stake ends, those people may be in a really competitive position. So simply said, RV, Trio, and Lucky. I think Lucky's my favorite. I think the name is great. What a great name. And Lucky, it's just such a positive word. And I love the beautiful green 4-leaf clover emoji icon. So there you go. Mr. Ego asks, and whenever we renew our team stake, do we need to claim our rewards before renewing? Asking because some forget to mint hedgeroom for ending stake, therefore the hedgeroom is gone forever. No. So those rewards are always going to be there for you to claim. So the claiming of rewards is entirely separate from the stake management. The way it works is that your stake record keeps a log of what periods you staked in, and then there's a separate contract that the team contract deploys called the Stake Reward Distribution Contract, SRDC for short. So what the SRDC is what manages the claiming, and so all you have to do is just prove that your address had successfully staked during a stake period. And then the SRDC lets you claim those tokens and it sends them to you. So you do not have to do it. The claiming part is entirely separate from the stake management part. So we did that for that exact reason. I forgot to collect hedgeroom on a stake once. It wasn't that much because it was a short stake, but it does suck to have to remember that step. So that's why we made the reward claiming just entirely independent from that. And it makes it so that you don't ever have, you can choose when you want to take possession of those coins. If you want to, securely store those tokens, you can just leave them in the SRDC until you're ready to claim them. RV says excellent. Yeah, I like RV. He says maybe ETH gas will be cheaper in 10 years. So I don't think that's the case. And so if it does, great, you know, because like I think it's better to prepare for the worst, because then if the gas is cheap, then it's like, okay, even more benefit. But in general, I think it's better to prepare for the worst rather than have hopium and have high expectations of profit from the work of others. Because anytime someone says, "Oh, the ETH devs are going to fix that," that's having expectations of the ETH devs. And why should you like? And also the ETH devs are not interested in making fees go down. Like why would you? Like think about it. Just think about it. Like so the product that a blockchain sells is block space. Some block space is more valuable than others because some blocks, you know, are on blockchains that have different value propositions. So the value proposition of Ethereum is that it's a permissionless chain, it's immutable, and it, you know, performs, you know, and it has an EVM that you can operate smart contracts on. So if there's more demand for a finite amount of blocks, then that price of that product is going to go up. And so, you know, why would you be trying to make it that so that people pay less for your product? Like they should be trying to make it more expensive. Because if there's, you know, if blocks are cheap, then there's not an incentive to operate the network. Then why would that network be permanent? And permanence is a major value proposition of blockchains. Like, you know, everyone's like, oh, blockchains are permanent. It's only permanent if there's people that are incentivized to continue to operate the chain. And so high fees increases the likelihood of permanence. I think permanence is important for if you have an asset that you're expecting to last 10, 15 years, you want permanence. You want high fees, because if fees were low, that means that no one's running the chain. So, you know, high fees is a positive sign. And it sucks for the end user. It sucks for the retail user. It doesn't suck for large use cases, and that's really who drives the value in these chains. So I think high fees are good, and you should only expect them to go up. Like, why wouldn't they? Because right now, like, what % of the world is using these blockchains? At, you know, in 10, 15 years from now, do you expect there to be more users of the blockchain or less? Do you expect there to be more high value applications on these chains, or do you expect there to be less? And so if you think that blockchains are going to continue to grow in use, and if you want your assets on the strongest blockchains, it's unreasonable to think the fees are going down. You know, Pulse Chain is a solution in the short term, because it's one, just like launching on a new chain where the activity is probably going to be lower. There's more capacity because there's faster blocks, and I think the blocks are a little bit larger. So there's increased, just increased capacity. So it's kind of like a horizontal scaling. It's like a linear scaling solution. But, you know, if we expect, you know, if you want Pulse Chain to go up, and because, you know, the Pulse Chain price is going to be relatively low at the start, because the gas fee is quoted in the underlying token. And if, you know, and part of what makes the ETH, you know, ETH gas was cheap at the launch of Hex because ETH was $80. Then when ETH hit $4,000, it's like, okay, the units of gas are priced in ETH. The ETH itself is more valuable. And so like the dollar value of that gas fee gets really high. And so if you expect Pulse Chain to go up 10,000x, then fees are going to go up 10,000x. And if you expect Pulse Chain to be a key catalyst in driving mainstream adoption of blockchains by both retail users and institutional users, then in that case, you know, those blocks are going to be valuable. And they're going to be full. So what's the price of those going to be when they're full, especially with all these hex stakes ending? The hex stakes alone are going to fill up the blocks. And so I choose not to have hopium about fees. I have, what's the opposite of hopium? I have dread that fees are going to be shockingly high. And the way you get around that is, one, just, you know, if the hex price just massively outperforms, then, you know, that lessens the impact. So you want to hold assets that outperform the increase in the gas fee. And you want to hedge against the gas fee by just holding the unit that the gas fee is also in. So like right now, you know, because of just the reality of the gas fees on Ethereum, you should be holding ETH to pay for your gas to end stakes. Because, you know, if you're holding ETH now, then the as the gas price goes up, so does, your ETH is going up with it. Maybe the gas price at the moment you need to end a stake is high or low, you don't know, but at least you have that unit. And so that protects you from just like the increase in gas prices as a result of just the, Ethereum going up. And so likewise with Pulse Chain, you should also be holding Pulse Chain, because for the, expecting the fees on Pulse Chain to be expensive in 10 years when you want to end your stakes. So, you have to hold that underlying gas token, to do this stuff. And so, which sucks. And that's like a big part of why we built Maximus, is because all that money that people are going to have to either sell Hex for Ethereum to end their stakes, or otherwise just, or holding it in ETH, like I just described, to prepare for your stakes to end. That's money that should be being buy support in the Hex market. So all the money, even if even if your stake is up so much in value that you can't afford to do it, and it is worth to end it, all that gas from everybody doing their own individual stakes, that's just like a massive extraction of value that should be putting positive price pressure on the Hex price, but it's not. And so that was the main driving factor in why I built Maximus, is to maintain that value in the Hex economy, because that's a serious problem. And every day gets worse, because every day that goes by, the longest stake of that day is a little bit more expensive to end, because the interest calculation in the Hex contract has to loop through for every day that you staked to calculate how much you earned that day. And so for longer stakes, it has to loop through 5,555 times to calculate your interest. And so each loop that it does costs 2,300 units of gas. And those gas units, you can look on Etherscan for what the cost of Ethereum is for each unit of gas. So saving that money in the Hexen economy is massively important for the future of our ecosystem. And so that is the main reason why I built Maximus. The whole liquidity part and flexibility to your stakes, that's like an added bonus. But the pooling many stakes into one, that's like the critical thing that needed to be solved. And it's going to be, and it's important. Everyone says Pulse Chain is going to solve this. Well, one, what if it doesn't? What if Pulse Chain never comes? Like what if something critical fails? Like, you have to prepare for the worst. Like, it's not FUD. It's just like, being smart, truly. Like you can't just have rosy-eyed hopium, or else you're going to get wrecked one way or another. And so, or what if, Pulse Chain is such a success that it's even more expensive than Ethereum to use? And I've heard people say, oh, we'll just fork. It's like, okay, you can't just fork away from your problems. Like, because it's not even a problem. That's a good thing. If the fees are up, that's an indicator of success. And so, get like you keeping more money in Hex is massively important, especially because at that time, think about it too. If people have to be allocating a lot of money just for gas at the time when a lot of liquid Hex is going to come online, that's around year 10 and year 15. It's like those are two downwards pressures on the price. Like we may see multi-year bear markets as a result of those two factors alone. And so the more money we can maintain in Hex, the stronger our price chart is going to be, and the stronger that our economy is going to be. And that's critically important. And more people should be talking about this. I think more people just have the expectation that gas is going to be lower just because that's what they want. And that's what I want too. But I know the world is not going to cater to what I want. I know the world is going to cater to what the market wants. And if the market demands permissionless, immutable, permanent blockchains, then, if there's high demand for the blocks on those blockchains, then that price is going to go up regardless of what I want. And so this is how we solve it. Crypto Cliff Notes says, so let's say the next year I restake December, I still get the whole prior 11 months. Next year. Yeah, so I think you mean by rolling forward your stake. So the it's not based on like what month you started. It's as long as you started your team stake before the next base stake starts. Because I keep repeating this, but it's very important. The base stake, that 1 year revolving stake, that is the stake calendar. Like a year in team is from when it's marked, like the team new year happens when the base stake starts. So every year when a base stake starts, that's when the team staking year starts. And so you just have to lock in your team stake before that to earn for the next year. And it doesn't matter when you restake or when you roll forward. It's just so long as you locked in your stake before that base stake started and you held it staked until the base stake ends. So that's really all. It doesn't necessarily matter what month you did during that time. You just have to lock it in before the deadline and then hold it staked until the end of the deadline. Okay, so why the concept of the perpetuals is better than just releasing a new maxi pool each year. With the second approach, in time, we'll have maxi pools finishing yearly with potentially max yield across. So how do you know that won't happen? First of all, two, the perpetuals are really important because they're like the maxi stake that's like a specific long-term staking strategy, whereas with these shorter stakes actually have a really valid place in a portfolio because for a lot of users it's like the maxi, especially if there's a lot of maxi stakes, that pretty much wipes out a lot of premium potential, and so the liquidity piece, where you can cash out of your maxi position. If a lot of people are also trying to cash out at the same time you are, then you won't get as much as it's worth. And then in that case, you would wish that, rather than, trying to cash out 4 years or 3 years into a maxi stake, you would wish that you could have just held in Trio and then locked in that guaranteed amount. So the shorter stakes are really important for people that, are relying on these as part of like a personal savings or personal finance strategy. The maxi, and Deci kind of, is kind of looped in with maxi with the long-term staking strategy. That's more like a retirement, like long-term investment strategy where like if you need cash, you have the liquidity, but because it's the stakes are so long. And I talked about this yesterday on the video, and I also brought it up in a tweet thread yesterday. The longer the stake, the higher the uncertainty with how much it's going to be worth. And so high uncertainty means high volatility. And so that volatility is expressed through a premium and discount cycle, where sometimes there might be a massive premium to the underlying hex, and other times there may be a massive discount. And so, if you're relying on the liquidity midway through the stake, you better hope it's at a premium. And if there's a lot of people relying on that liquidity, then that sucks down the premium and may cause a discount. So the short stakes are massively important, for just rounding out that risk spectrum that people are willing to take. And aside from that, I've actually kind of changed my perspective on the impact of burning. So the big hex whales, they want that to happen because it decreases the competition for the short-term staking, which they have the monopoly on. So just locking up a bunch of hex supply, people think that that's good for, like, small hex people think that that's good for them. It's really not. Locking up or even permanently burning, like a lot of these ICOSA stakes, like people locking up the ICOSA or locking up, doing the HSI, a small HSI long-term for ICOSA, it's effectively burning hex because if those stakes are small, they may be infeasible to end. And so maybe no hedgeron bidder is going to buy them. Like that's effectively, it's burning a bunch of hex. But if you think about it, burning hex is like it's distributing it equally to everybody. And so the people that have the most of it are benefiting the most from that supply being burned. And so I've kind of changed my perspective on the ecosystem wide value of just like locking up a bunch of hex, for long term, because the people that mainly benefit from that are probably not you. They're definitely the people that are the largest holders. They're the ones that really benefit from that. It's the large holders that have short stakes who benefit from that. And so rather than just like kind of feeding that beast and just, effectively being exit liquidity for them, because if all that hex is all staked max length, then what you're doing is you're removing competition in the seller's market in that shorter term. And so it's basically just giving more money to the people that already have way more than you do. So that's why I think, as far as like kind of, introducing some equilibrium into the hex market, I think these short-term stake cycles are massively important because it increases competition in that short-term staking strategy, which right now basically the whales have a monopoly on. And so rather than those big whales just having these like short-term stakes that are basically printing free money that they can just dump, rather than those people getting that like risk-free money that way, I want those whales to have to achieve that money by taking on more risk, because if there's more competition for short-term staking, then in order to gain that same ROI, they have to be more accurate in their timing of when they sell and when they buy. And so causing them to have to take on more trading risk is beneficial for everybody else. So there's some kind of like meta ecosystem-wide things why these perpetuals are important. To kind of provide some equilibrium and increase competition in that shorter term staking strategy. But then also just for the user benefit, where a lot of people they do want to have certainty that in 3 years they can and they don't want to rely on timing the premium and discount cycle. So these shorter stakes, that because they're shorter and there's more certainty on what they're going to be worth at the end, there's less range that premium and discount can go into. Whereas like base, it almost makes no sense for anyone to overpay for base or underpay for base. And so that means that, or overpay or sell for less than it's worth, because it's, you can be very accurate in your guess of what it's going to be in worth in a year. You can pretty much guess that the daily payout per t-shirt is probably going to be around 6.2, in the next year. Whereas, the longer you get, the less certain you are. And so those shorter stakes will have like a less, like smaller range of premium discount, which may mean more liquidity for those shorter stakes. And then every time they end, the price basically gets reset at that new redemption rate. So there's more certainty in the hex denominated value of those shorter ones, which is important for people with, just like shorter term passive income strategies or shorter term saving strategies. So that's why these perpetual pools are pretty important. Saraf says, by the way, great job with all you guys are doing. Thank you so much, and thank you for that awesome question. That's you're thinking in the right space. Mr. Yuga says that's perfectly thought about. Nice. Yep. At the end of the day, if you plan on staking hex, it only makes sense and with no downside to go with Maxi TEAM, etc. Yeah, I mean, Maxi's just awesome. The perpetuals that provides whole new value propositions for people with just different strategies, and and some people are already doing. People already do 3 year, 5, 3 year, 7 year, 10 year stakes. So and it saves massive gas. Very minimal contract risk. Like there's no reliance on some oracle that's driven by price. Like most projects, they blow up either because there's an admin key. There's no admin key in ours. Or they blow up because there's some price oracle that someone is able to manipulate. And so there's nothing like that, because nothing in any of these pools or team is based on a price of an asset. And so there's no price that someone can go and use flash loans to manipulate. So those are the two main reasons why DeFi products break. And so those are not, part of ours. And all the things that, we like about Hex, audited, no admin keys, trustless, immutable code, all those things are maintained in these. And so while there is additional contract risk, just because, there's an additional contract, that contract risk is minimal, because it doesn't rely on the things that are most likely to cause a contract to blow up. Those aren't present here. And then two, the contract is so simple. Like, these are really simple contracts where you as a user can reasonably go in, read the code, where all the code is very readable. Like, there's no craziness. Like, everything is very well, basically every line of code or every function has a plain text descriptor of what it does. And all the variables just make sense. They're all very readable, and there's nothing complicated or crazy going on. And so you as a user, if you're worried about that, you can alleviate that risk for yourself, or at least your perception of the risk, by just going in and reading line by line the contracts. They're very short, very simple, and then you can prove to yourself that things are going to work. For me, okay, so Seraph says, for me, the best thing with these pools is not advertised enough, and this is security. I bet that in 15 years, at least 20 to 30% of the wallets will be wrecked from OPSEC perspective. Liquidity gives options. Yeah, and so in addition to that, I think that the fungibility is important here, where these are tokens that you can now, you can hold, say you mint DESI. You can hold your exposure to that 10-year stake across different private keys, maybe geographically distributed, maybe you have like your hot DESI wallet, so like say 20% of your DESI you're planning on, maybe you would sell if the premium was high. So maybe 20% you store in a hot wallet, and then say 40% of it you store in some cold storage that is maybe just somewhere that's hard to get to, and then maybe the other 40 you store in like a multi-sig one. So you can vary the range of your security across that, and if one of them is compromised, if you split it up across numerous keys that are stored in different ways, then your whole position isn't compromised. Whereas like with a like any solo stake, like just staking hex on your own, or even an HSI, the early end stake, like someone can hack your wallet and early end stake and nuke your whole thing. Or even if they don't get anything, if like it's less than halfway done, your whole it's kind of all or nothing thing, because it's non-fungible. Whether like the native solo stake just with the hex contract, that's non-fungible, and even in HSI NFT, it's NFT stake non-fungible. That's where the stake pools are different, is that it introduces fungibility, and that fungibility gives you the option to increase your operational security around it. So that's an awesome point, Seraph. Thanks for bringing that up. Mr. Catcher, respectfully, can we get a quick Turk with that Phoenix jersey? Thanks. It's actually not Phoenix. It's actually a Raptors jersey. T-Mac. Can you see it? Tracy McGrady. I think T-Mac's probably my favorite player. While we're talking about Tracy McGrady, here, let's answer these questions, and we'll watch a T-Mac highlight video real quick of my favorite moment in T-Mac history. Team, yep. Paul knows what's going on. Daniel, yep. Good info here. Thank you so much. Yes, retirement. That's what my max is. Yeah, that's kind of those longer term ones. With longer term ones, you can balance that risk and that reward a little bit differently. And yeah, that's really, really important. All right, we're going to take a quick little break here, and we are going to search Tracy McGrady 13 points.
It's obviously upset with money. McGrady for three. 35 seconds to go. Now by 7. Rockets going for a quick shot. Bowman is all over. McGrady foul is picked up. Yes. 4-point play. Houston. Barrett can't find anybody there. No timeout for He finally gets it in to McGrady. McGrady overboard for three. Yes. Tracy McGrady. Sorry, gets it in. And Brown lost it. Here comes McGrady. No timeout for McGrady.
For the win. Yes.
7 to go. San Antonio. No timeout. Here's Parker on the Rockets. Steal the game from the Stars.
Easy choice. See if we can find some.
Tracy McGrady has it. Winds his way down the floor. Oh, no! Shot at circle. Extra for now, David. We don't have this in Hungary. I hope you have the rights to the posters.
We should get Tracy McGrady on our team. Someone reach out to T-Mac. Let's get him. Let's get him in team. Mix, aka Jussel says, "Nice, go next." He said, "Okay, Mr. Ego has a question." He says, "I don't know if you can answer this, but whenever we stake our hex, the coins are therefore not in our wallet, and so not in our possession. We still need to pay taxes on these." Well, I mean, it depends where you are. That's kind of the first caveat there. And obviously, you should get your own tax advice. Don't look to me for tax advice. I'm a tax rebel. Not really though. I pay taxes and it sucks. Literally, it's the worst. Because it's really no representation. I believe you should not pay for no taxation without representation. Like, what representation does the federal government have on our crypto stuff? Nothing. Truly nothing. So, maybe there will be a revolutionary war fought over that. So, but to answer your question about kind of how the stakes work, so from my understanding, and other people have produced better content on this, kind of the short explanation is that so when you stake your hex, they're not in your possession, but it's you pay tax when you sell something or when you collect income in something. And so when you stake your hex, they're burnt, but then when you restake, it remints your principal and then your interest. So the principal isn't classified as income because you already had that, but the interest is. So that yield, it counts as income at the price that it was worth when you minted it. And so yeah, that's kind of how that works. And so what's pretty cool, and this was by no means like a design criteria of Maxi or any of these perpetual pool tokens, but when you join a pool, you never have to take possession of the income because it just ratchets up in price. And so and the price kind of matches the earnings. And so you have a choice there if you want to redeem, because if you were to redeem, then that different it'd be the same, where the difference in what you put in at the start redeemable is income. So you can either choose to, if it's better for you to classify something as an income event or classify something as a capital gain, you have that option for your stake. Or and you can break it down into any amount that you want. Whereas with a native hex stake, you have to do it's like an all or nothing to end the stake, and then it has that part that's classified as income. So whereas Maxi, you have the option of how much you want to redeem or if you want to just sell. And what's cool about the minting and redemption phases is, like, when you look at the Maxi chart during the minting phase, you could also redeem at the same rate. And so, like, anytime that like the base or the trio or the lucky or desi stake ends, there's that new it's called the reload phase, where you can either add more to the stake or you can redeem. Because there's minting and redemption that are at the same rate. That rate is like a center of gravity that the price converges to. And so every period of time, the way that these charts will probably look is like, craziness in the price, but then during the minting redemption phase, it jets down or up to the redemption rate, and then it is flat. And then when the new stake starts, then it kind of goes on its way. So during the redemption phases, that's probably when you'll, if you were to sell your pool tokens, you'd probably get it pretty close to what they are redeemable for. So you have the option of how you want to structure your exit and in what increments you want to structure it. So that's like a huge benefit that some people may get a lot of use from. Says Team X is nice. Yep, that was. I used to play basketball. I was a state champion. I won a state championship in basketball, football, and track. And in basketball, I tried to emulate Tracy McGrady, but I was I was obviously nowhere near as good as T-Mac, but I just love that, just wet from the floor, crash the boards. What's up, y'all? I love the old school broadcast from the 3 Corners tapes. Yeah, it's so much fun. I love watching the old Tracy McGrady highlights. I love watching Kobe Bryant highlights. I love watching Kobe Bryant's last game. I think that's amazing. Just how that ended. And also like Allen Iverson, another one I like to watch. Nostalgia in its finest, crypto plus NBA. Who would have thought? Yeah. So is T-Mac's dad some Scottish dude? I wonder how I got that last name. I mean, we don't need to go into the history of how the names worked for people that were non-consensually brought into the country and then forced to work here for free. But a lot of those people were given names based on who owned them, and so maybe there's something like that, or somewhere along. I obviously don't know Tracy McGrady's personal family genealogy history, but who knows? Maybe someone along the line there was someone like top of the morning. Lawful money does not count as federal income and is just tax exempt. Oh, is this? Oh yeah, he was talking. How can we classify Hex and the Perpetuals and Team as lawful money? If Tracy didn't get injured, would you say he would have been the dude over Kobe? Probably. I mean, Kobe had the star power. I think that and a teammate like Shaq, which, amplified his winning ability. I do know that Kobe Bryant would say that T-Mac was the hardest player to play against. So Kobe's considered the best, and if you ask the best who he thought was the best, and he says T-Mac, then that's probably true. But yeah, you never know. It's always hard. It's always hard to say like, oh, if this thing didn't happen, then what would have Because what's that saying? Like, if my aunt had balls, what's that saying? I think now it's been updated. If my aunt had balls, they could be either my aunt or my uncle. But some along those lines where it's hard to predict what the if this then what. So it's hard to say, and that's kind of the beauty of these games is that it's just all a matter of who was able to come up and play that day. All right, so I got to the end of the questions there. I did want to here. Let's go see what's going on Twitter. Let's tweet this out. Lots of great questions in the chat and fun watching vintage Tracy. See if we can find him on Tracy McGrady. Does T-Mac have Twitter? There's T-Mac highlights while wearing a #1 T-Mac Raptors jersey. Let's attach the. If you can, please share this link, because what we're going to get into now is we're going to talk more about Team, the Perpetuals. Name says you see my It's Always Funny, and no, let's go see it. Where is that? Where can I find it? Where's your meme? That's funny. I would put Maxi on the simpler end of that spectrum. So I guess, to repeat for the people that are new on the stream right now. So I think I even said it here. Once the audit's done, it's pretty much go time. We have all the front ends are built. We have, so here, let's go to Maximus TEAM v2.enable.app, and let's go to Maximus perpetuals test v2.anvil.app. So we've got these all ready to go. So here, okay, I need to, there's some stuff on the aesthetic of, this stuff, but the minting is done. So now it's just like that. Here's the staking dashboard. So for the people that participated in this, okay, it looks like some people have done the staking other than me. I'm so dumb, and I accidentally early end staked my stake from this first period. So from period 1. So in a day or two, I am going to need some help with people ending their stakes and sending me screenshots of how the dashboards work. And because I'm stupid, and I rolled forward my stake, or I early end staked my stake just to kind of do some testing, and I did the whole thing. So I was testing the button, because like right here, it's pretty funny. I was testing this, like this whole sequence of the maximum number and then the math on this. And when I did that, I clicked end stake and I did it. And I was like, oh shit, I just gave up my rewards. You see here, like this is blank, this view rewards from my first stake that captured year 1 because I accidentally was testing and I early end stake. So that was pretty dumb of me. So I will probably need some help with the rewards claiming section from people that did successfully stake in year 1. And I think there was like a handful of people that did. So I will need some help on that. And then yesterday, what we did was we worked on these dashboards. So this one is for base. So this one's a little harder because it's harder to do on testnet, because on the mainnet Maxi dashboard, a lot of these numbers are pulled in from different APIs that only exist on mainnet, like the Hex subgraph API. That's, as far as I know, that's only on mainnet. So, and that's where I get in the stuff like the value of the stake, how much it's earned, how many T-shares it is, all that stuff. So, so some of the stuff, it doesn't really make sense to add until the stake starts. But then, so we took care of these things, like getting the minting schedule for these, for Trio, Lucky. Okay, so this one, it's pretty obvious that okay, so stake start for Lucky 996, it ends on this day. So, we yesterday we did a lot of that stuff. So some of the stuff we're going to do a little bit later. The stakes for these, so, stakes still ongoing, wait till it's over. So there's really, like for the perpetuals, there's really nothing to do until the stakes end. But then, yeah, so as far as everything is, getting ready for launch is concerned, we have everything we need. Everything else is really just kind of like aesthetic stuff or nice to have features. But yeah, as soon as that audit's complete, we will be getting right into it. So here, let's talk a little bit about this. So I really feel like Hex is at a turning point. Like where I say, we're at a new era of Hex, and that's because of all the financial innovation that's happening in the Hex ecosystem. So we, obviously, the stuff that they're doing with Hedron, with Icosa, that adds some new speculative elements, new speculative stickiness to the Hex ecosystem. And more speculation means more volatility. More volatility means more opportunity. That opportunity attracts people into the market. And so, there's that stuff going on. And then the things that we're doing, where we're directly adding financial utility to Hex, with the pools by by adding one, I mean, just again, I always harp on it because it's, in my opinion, the most important part of the whole pool, the hex pooling thing, is the retention of that gas money in the hex economy. That, by and large, is the main ecosystem benefit. So, other than that, adding fungibility to the hex stakes and adding liquidity to the hex stakes, that unlocks entirely new financial applications for hex. And it unlocks entirely new user use cases for hex. And so adding this financial utility, that's like really magical. And also, this is the first serious hexagon bear market. We had our, during the mint fit, or during the initial year of hex, we had a bear market pretty much from May until really November, unless you count the like big payday pump, like the end of that. There was kind of this like pump that retraced itself. So if we basically had a hexagon bear market from May to November of 2020, and then it was all up 2021, and then basically from September of 2021 to now, even, like, we're in a serious bear market. And the whole world is in a bear market too, so it's relative to everyone else, it's like not so bad. Things are down from the highs, but compared to where everything else was 2 years ago, we're still up massively. So, like, depending on your perspective, that's to tell whether we're in a bear market or not. But we're in a hexagon bear market. And so the things that really rebound and really continue to that tune up for the next bull market are the things where the communities are building in the bear market. And it's like Alex and Hedron, they're building, we're building, and so things are really electric. Like, it feels electric in Hexago. Like, the prices are down from the highs, they're up massively from 2 years ago, and there's more people than ever, more eyeballs than ever. People are, all eyes are on Hex, especially from outside of crypto. By now it's like, it's day like 996 today. Hex has lasted 1,000 days, perfect operation, no issues. So, like, the broader crypto ecosystem, they're really having to come to reality around what Hex is and what it isn't. Like, and what Hex has proven to be is a serious financial force, and what it proven to not be is a scam, like what they all thought it was. And so, the broader crypto market is kind of coming to that realization. And Richard coming, I think coming to the US, that's, I mean, even though everyone knew, we all knew that he has no criminal issues anywhere, that he can come to the US whenever he wants. Him coming to the US, I think, like, proved a lot of just like those shit talkers wrong. And so just the general, perception of Hex and everything is wrong. And even listening to Richard's debates with these other people, it seems like other people in crypto are, he is gaining more respect. I think there was kind of, like, all the outrage marketing and the flexing, like, people, I think from the outside world, it's like people kind of thought that was dumb. Now that's kind of cooled down a little bit, just a little bit though. And I don't think it's the end of it. And now, like, the results are clear, 1,000 days of Hex. And especially if Hex kind of comes out of this bear market as like an industry leader, it's like all the things are falling in place for, a very prosperous decade and century in Hex. And, it is electric. Like, we're kind of past the point where, like, first year, there was a lot, price in the first year was so low because there really was a lot of risk. By then, there was no track record. So here, let's pull up the price chart and I'll kind of talk through the hexagon history here. So how can we find let's go to hex.cash. Okay, so this is the V2 chart. Let's look at the V1 chart, because this captures the initial. So when we're looking at this, let's zoom in a little bit so we can get a better view. So like in this first year, so Hex launched, let's just draw some lines here to break it down. So from launch in December to the end of the first year, so December to December, the price was so low, especially here, because it had no track record. There's, you know, the initial launch phase was still ongoing, so the inflation rate of Hex was super high during that time, and it was unknown who knew it was going to happen, and everyone still, you know, people still thought it was a scam. But then by now, you know, Hex, you know, it had another year, you know, so that was the first launch year. Then everyone's like, okay, what's going to happen next? So from year 1 to year 2, that trend continued. And then we didn't really have like a blow off top. It was really just like kind of like a normal trend reversal here. It's like we went up so hard for so long that like this retrace was kind of due. And a lot of, you know, early 1 year, 2 year long stakes were coming due. Big whales just had, you know, more money than they could ever imagine cashing out. And, you know, a lot of things, you know, new users, you know, not as enthusiastically onboarding, you know, broader crypto market down cycle, consumer inflation eating into people's investment budgets. So a lot of things that kind of, you know, were causes for this bear market here. But this is really our first hexagon bear market. And so now it's really a matter of like, how do we come out of this? And so that's exciting, is that, you know, now is like our opportunity, you know, because like Hex has basically been straight up for the first 2 years. And now is our first opportunity to show the world what happens in a, you know, coming out of a bear market and into a bull market in Hex. And by now it's like so much of the early, you know, because like in the first year, the way I view it, and I did a video on this, you know, a long time ago, where I posed a question. I said, was Hex the most successful launch in history? And maybe we'll replay that here just to kind of, you know, discuss those topics. But what I was talking about is how, you know, the end of that minting phase of Hex, that, you know, 351-day adoption amplifier phase, that was capped off with big payday. That really was like a pivotal moment, because the during that time, there were so many things that could have gone wrong. The adoption amplifier could have had an inflation bug. Big payday could have caused some like issue. And when all those kind of one-time things came and went, that alleviated a huge category of risk in the Hex contract. And so a lot of that risk is gone. Then that kind of like critical mass of like, you know, enthusiastic, dedicated users was achieved. And so that alleviates another class of risk, that like, okay, is this just going to be like a flash in the pan and then everyone's just going to be on to the next thing? Or are people going to be retained, and is this thing going to have stickiness? And so every day that goes by, there is, you know, there's a, you know, new types of risk in the Hex market that have a chance to be alleviated. So during the first year, like all the launch stuff risk, kind of the second year was like, okay, is this thing going to like just go away? And then now in this third year, the chance that we have is, you know, to alleviate the risk of, okay, what happens if there's a bear market? Is everyone going to give up? And what we're seeing now with the, you know, just with all the ecosystem development going on with, you know, us and Hedron, and people, you know, still enthusiastic, even people that bought the top and are down big, they're still hexagons. Obviously there are people that dropped off, but, you know, people are still in it, and the numbers are only growing. Like when we look at the you know, user growth rate, that's always growing. More people getting involved. We're reaching new audiences now with a lot more legitimacy, longer track record. So all these things add up to, you know, and now what we're, you know, we have the chance to show the world, you know, what happens after a hexagon bear market. And so each year it's like we have a chance to alleviate some of the big systemic risk in Hex. And this one I think is probably more important, is like what happens after a bear market. You know, some of the stuff, you know, like, is the launch going to work? Are people going to stick around? Like those risks, like those are, you know, medium from my perspective. But this risk, you know, now that we get to alleviate is like, okay, what happens after a hexagon bear market? And and also the timing of the Maximus pools coming out, team coming out, these ecosystem developments going on. It's like, these can be big catalysts for the price and big catalysts for adoption. And what better time to start measuring that performance from than during, a big bear market. And so I really do, get the sense that we really are, it is a new era for Hex. And at the same time, we're only 3 years in. We're not even 3 years in yet. We're 2.5 years in. So I think we have a lot of exciting moments ahead of us. And where I'll be. I'll be right here. Seraph follows up, says, how cool would it be after our 13th bear market? Yeah, I mean, Bitcoin's had its like 4th bear market. We've had our first. Ethereum is in its 2nd. It's the real deal, and we're right here. All right, does anyone else have any more questions? Let's see what this person had to say. Benjamin on Twitter says, woke up from deep sleep earlier this week with an epiphany regarding my Maxi team staking strategy. No kidding. I've had butterflies in my stomach ever since. See those butterflies. That's important. When a lot of the early when Hex first came out and all those people were coming up with their minting and staking strategies, a lot of people got those same butterflies, and that's pretty important. Here on Maximus, we say this launch is going to be a huge celebration of Hex and our future selves. Are you ready to party? I'm looking forward to your launches, but I've heard the launch is coming a few thousand times. Any date set yet? Waiting for our security guys to get back to us in the next few days, then we'll announce the launch date. Everyone's like, when launch? Look at that. Probably some scam. Yeah, fucking scammer. Can't believe this is all here. I mean, right now we're basically just waiting for the here. Actually, we're going to listen to right now. We're going to listen to Maximus. Old Key put out a video yesterday that was really good. Yep. For the new people watching, let's put this on.
Hey guys, my name is Stan, aka Gold Key. I'm one of the founders of Maximus, and I'm excited to tell you about Maximus DAO and some exciting products we're launching soon. So let's hop in. Maximus DAO, build your legacy for generations to come. We're on a mission to empower elite gladiators with high-yield assets to build empires of generational wealth. Our vision is to build the best decentralized financial tools that are easy to use, secure, and maximize returns for investors. Maximus is built on Hex, which is a leading DeFi protocol that allows people to stake their Hex tokens and earn trustless yield. Hex has a fixed inflation rate of 3.69%, which is rewarded to people that stake their Hex. Hex has 2 bonuses, the bigger pays better bonus, which is 10% for staking up to 150 million Hex, and the longer pays better bonus, which is 200% for staking up to 10 years. There's also an early end stake penalty where if you unstake your Hex before the stake's maturity, you will incur a severe penalty. In its first 2 years, Hex has done a 10,000x price run up, and there are over 100,000 stakers actively using the protocol. So we thought, what if there's a way to maximize Hex yield and minimize gas fees for stakers? So we built Maximus stake pools, which are trusted smart contracts that enable people to stake their HEX together to earn more yield and save on gas, maximizing bonuses, instant liquidity, gas fee savings, and community owned. You can think of Maximus stake pools as one giant stake. Your tokens hold ownership and can redeem its value of the HEX principal plus earn interest when the stake ends. So how do they work? All pools start with a mint period where you can mint one pool token per one HEX pledged to the smart contract. When the mint period ends, all the HEX pooled is then staked through the HEX smart contract. From that point on, the stake is earning yield, which is increasing the redemption value of your tokens. And when the stake ends, you can redeem your HEX principal plus earn interest from the smart contract by burning your pool tokens. We launched our first pool, Maxi, which was a 15-year stake, on April 15th and had over 5,000 people pledge a combined $50 million of HEX during the 2-week launch phase. Since the start of the stake, Maxi has commanded a premium over HEX in the underlying asset and hitting an all-time high of 133%. So it's performing really well on the free market. And on the back end, Maxi has been earning 32.5% APY and has already earned 30 million HEX in the first 114 days. To expand Maximus DAO and offer new opportunities for HEX, we are introducing 4 new stake pools called the Perpetuals, and you'll find out why. Base is a 1-year stake, Trio is a 3-year stake, Lucky is a 7-year, and Desi is a 10-year. These pools will start just like Maxi with the mint phase. All the HEX will be staked and begin earning yield. But what makes these new and innovative is that we are introducing auto compounding yield. So when those stakes end, you have 3 options. You can either redeem all or a portion of your HEX principal plus earn interest. You can leave your HEX in the pool and be auto restaked into the next term, or you can mint more pool tokens into that pool at the new mint rate, which is equal to the current redemption value of that pool token. You can think of these pools as a flexible staking ladder. A staking ladder is a strategy many already use, so you can redeem trustless HEX yield periodically or simply sell your tokens at any time. And again, bigger bonuses, gas fee savings, and instant liquidity. To support the growth of the perpetuals, we're also introducing Maximus TEAM. You can mint and stake TEAM to earn rewards from the success of Maximus stake pools, offering passive income. The token supply is deflationary, uncapped potential for future earnings, and again, community owned. During the mint period, you can mint 1 TEAM per 1 Maxi pledged to the contract. After the mint period ends, no more TEAM will ever be minted and the supply only goes down. 20% of the Maxi used to mint TEAM is burned, increasing Maxi's redemption value. 30% of the Maxi used to mint TEAM is distributed back to TEAM stakers in years 3, 6, and 9 for the Maxi 369 rebate, and 50% of the Maxi used to mint and a copy of all the TEAM is sent to the mystery box. Now, if you're wondering what the mystery box is, it is just that, a mystery, and there should be no expectations. TEAM staking. So stake TEAM for an entire 1-year stake period to earn rewards for that period. If you unstake early, there is a 3.69% penalty on your TEAM, and you do not earn rewards for that period. When a stake period ends, all whitelisted tokens in the TEAM treasury are claimable by TEAM stakers. TEAM rewards. So the perpetuals share half of the HEX earned from the bigger pays better bonus and all of the heat drawn from those stakes. So TEAM stakers are incentivized to grow the perpetuals. We spoke on the Maxi 369 rebate, which is 30% of the Maxi used to mint TEAM is rewarded back to TEAM stakers in years 3, 6, and 9. And then there is the no expectations piece. So there is the possibility to earn from more opportunities like direct airdrops to the TEAM smart contract or future products that reward TEAM stakers and send tokens to the TEAM treasury. So how to prepare for launch. If you want to mint TEAM, you're going to want to get Maxi. And if you want to mint into the perpetuals, you're going to want to get HEX. I invite you guys to join us. Follow us on Twitter, Maximus_DAO, and hop in our Telegram, t.me/MaximusDAO. We will be announcing a launch date soon for Team and the Perpetuals, and we will be posting to those channels. So make sure to tap in, and our website is maximus.cash. Thank you guys so much for spending the time to learn about Maximus DAO, and I am excited for launch. I hope you are too. Thank you.
So just thought I would play that. I think I did some push-ups while we were listening to that, but luckily the whole team and Perpetuals ecosystem is actually very simple. Like you could wrap it all up in Perpetuals are hex stake pools that repeat when they're done, and the team is the contract that deploys the perpetual pools, and the perpetual pools break off a tiny piece of their yield and then pay it to team stakers. And you have to stake your team for a whole year in order to earn from that year. And that's pretty much it. So, we're really proud just how simple it all is. And we think that it's really powerful as a financial asset. So this is quick 30. Yeah. Kind of out of breath. Let's see what people on Twitter are saying. Oh yeah, he was asking about that. See, look at that. Some good testnet action. That's cool. That's awesome. And oh my God, I'm so ready, guys. I'm so ready to launch this thing. I wish I would have got it done sooner. I remember because I guess I can kind of give you a breakdown of just how this all has unfolded. So we launched Maxi, that was April 15th. And then in May, a couple weeks after we launched Maxi, we were like, okay, like what's next? So a lot of people were asking for a bunch of different pools. So we're like, okay, we probably, want to introduce more staking options. And then, we also were like, okay, it's like we can just keep launching these pools and then we promote them, and then it could kind of get old and like just bearing that whole promotion responsibility solely on ourselves. We thought that might be hard. So okay, how can we get the community involved? Because there's really no incentive for. There's not much of an incentive for you if you're joining one of these pools. There's actually not much of an incentive for you to onboard new people into the pool, because if you're onboarding someone new into the pool that you're in, then you're basically introducing someone else who could potentially front run you if you want to ever sell. So inherently there wasn't really a big growth incentive for these pools, and since we think that these pools are so important for just the health of the hex economy, we're like, okay, how can we get as many people involved as possible? And so, and the way that I've seen it is like, I just looked at Hex. I'm like, okay, there's thousands of people that are actively involved in Hex who are actively promoting its growth. Like, why are they doing that? And the answer is because they have skin in the game, where you put forth money, you took financial risk, and you benefit from the growth of that ecosystem. And so we're like, okay, we should, structure something so that people can have skin in the game and then benefit from the growth. And so that was how we decided to open up the team thing, because, at first, with the perpetuals, we were just going to, the mystery box was going to get all the yield, and there was going to be no, there wasn't going to be a team token. It was just going to be, a contract that got part of that bigger pays better bonus. But then we're like, okay, why don't we open up this opportunity to everybody, and then have, a whole army of people with skin in the game that took real financial risk, who care about the growth of this ecosystem, who then are incentivized to grow the perpetual pools. So that was how we came up with the whole team concept, was to, really just invite people, to join the team and benefit from the growth of the ecosystem by doing, a fair launch with, minting Maxi. And so the reason why we chose Maxi as the only mintable coin, even though it definitely limits how much money could come in. And because that's not the whole point. Like, this isn't like some, you know, and obviously, I mean, luckily, and I'm not even luckily because it's pretty obvious, like, not like when a lot of projects launch, they're kind of clear money grabs. Like, this is obviously not a money grab. Like, if this was a money grab, we wouldn't have made it where the minting of the coin can only be done in a fairly illiquid asset, like, you know, Maxi, which has like a, you know, there's a maximum amount that could possibly come in. If it was a money grab, we'd have done minting with ETH, but, you know, that's not the whole point of this. And so, you know, we wanted to reward the people that participated in Maxi, you know, through that as well. And so that was why we did Maxi only minting. And because the Maxi, you know, it's like by doing the, you know, well, so you know, we chose Maxi purely to, you know, just, you know, it's like a reward to the people that did it, where the airdrop that, you know, because like everyone was asking for an airdrop, and we're like, okay, like, I don't just want to like print some token and just like give it out, you know, because like that's just stupid. Like, you know, there are all these airdrops where it's like, okay, here's a coin, and it's like, okay, nice, but I wanted to, like, if you know, I wanted to deliver value. I didn't want to just like airdrop a valueless token. I wanted to like deliver some type of value to the Maxi holders. And so by making it where only Maxi holders could, you know, mint, the benefit, you know, the value that they got from that via the, you know, is like, you know, through that minting rule, is that the people that minted Maxi with their hex and got in that 1-to-1 rate, now the rate's like 1.8. So they are like, the minters of Maxi already have that 80% advantage over someone buying, you know, buying Maxi today to then mint. And so, you know, that was just like, you know, and that's just like kind of a little bonus, you know, and then they don't have to, you know, mint with it. So that was part of the value. And then also with the whole burning aspect of it, and also that 369 rebate, where, you know, you can kind of get some back if you mint, and by being held for that 369 rebate period, it's reducing the circulating supply. So if like people that don't mint their team, you know, want to sell Maxi during those years, or you know, before year 9, it's just a little bit less competitive as sellers. So like, rather than just like minting some shit coin and airdropping it to Maxi holders, and then like kind of us being in a position where like, okay, like, do we now have to like make a market for it? And it's like, okay, if you're making a market for a coin you just printed and gave out, that really doesn't do anything, then you're basically just giving your money away. So you might as well just give it away directly instead of just like kind of that roundabout way. But rather than doing that, it's like we just wanted to do things that could, like, you know, boost the value, you know, just boost or otherwise provide some other benefits to the Maxi holder. So that's like the whole purpose of the Maxi minting. I think a lot more, the mystery box could have procured a lot more money had it done other tokens, but that wasn't the point of it. So the point of the whole Maxi minting is really as a thank you to the people that participated in the Maxi launch. So that's why we chose to do that. And so, yeah, so, you know, just as we're, you know, so these are the things that we're thinking about in, you know, the development of everything, and how, you know, we wanted to build it. And then from there, you know, we knew that we wanted to have, you know, something that incentivized the growth of the pools. Then in terms of deciding how to structure that, we, you know, chose to, because the original idea was to do just like a flat fee, but like on coming in, but that kind of sucks because it's like, then it's, you know, it kind of feels like that would be at your expense. Like if you minted one base token and then your base token was only backed by 0.99 hex, that kind of sucks. Like that, even though it's like a small amount, that does kind of suck. It feels like it came at your expense. And so we wanted the amount that, you know, was drawn, like the value that was drawn from the perpetuals and then paid to the team stakers. We only wanted that to be something that didn't feel like it came at anyone's expense. And we wanted it to only come from yield that they wouldn't have got on their own. And so that's why we chose to do the splitting the bigger pays better bonus, because, you know, most users, unless you have 150 million, you're not going to be getting that max bigger pays better bonus anyways. And so making it where it's only from that one, it's like yield that you only got by being in the pool. So it, you know, that's like free bonus money for you. And so you can split off part of that and then pay the, the part, the part of the ecosystem that's meant to drive growth of the whole ecosystem. So we thought that was just like a really fair way to, provide that staker yield. And then 2, we wanted it to be a direct growth incentive where, those earnings, if it's a small stake pool, the team earnings are small. If it's a big stake pool, those earnings are big. And so we wanted it to be like a performance-based incentive for the team stakers. Because like that, again, that's the whole point of Team, is to be a growth engine for the Hex economy by being a growth engine for these perpetual Hex stake pools. So a lot of deliberate thought went into the structure of the like where that income was going to come from. And we wanted it to just feel fair for everybody. And so it being money you only got because you're in the pool, and then not, and also not, the other idea was to just like print extra pool tokens and pay the pool tokens directly to Team. But we didn't necessarily like that idea because then it's like that's like diluting the pool holders. It's introducing more selling competition. So we didn't want to do that. And so of all the options of ways to, break off some value from the pools and then use that to incentivize the team stakers, just splitting the bigger pays better, that was like the clear, easy answer. And so far everyone seems to be fine with it. Like I barely hear anyone even talk about that, because it's just kind of like a no-brainer. So so that was how we decided on that. And then like the last thing that we were deciding on was really just like the staking rules. Like how do the rewards happen? I guess so before the staking rules, well, no, I guess it's part of it, but the Maxi Rebate, that 369 rebate, we didn't have to do that. But the reason why we chose to was, 1, to just like, be a bonus for the team stakers. And 2, it's because Maxi's so great that it's so hard to part with, that, the fact that you can reclaim some part of it, and it's all depending, at minimum, if 100% of team is staked, you get back 0.15. But what's the team price if 100% of the team is staked? So it's like, there's going to be a balance. It's going to reach some level. So probably won't be 0.15. Probably going to be a little higher than that. But it could be if only 2% of team is staked, then that's 15 Maxi per team. So you could 15x your Maxi if you are in that group of 2% of all of the team that is staked. So like, it's anywhere in between there is kind of the range it could be. And so we wanted to, because Maxi is so hard to part with, we wanted people to kind of ease that feeling of, of parting with it by introducing that staker rebate, and to add, those bonuses, like just for the stakers in those years. Because the value of like that I see in having these like kind of one-time events is that they introduce volatility to the market. And anytime, again, I always repeat this, anytime there's volatility, there's opportunity. And so that is like a source of opportunity for people, because in those years 3, 6, and 9, when there's that kind of like lump sum payment back of Maxi, where, what's Maxi going to be worth in 3 years? What's going to be worth in 6 years? What's going to be worth in 9 years? Like it's, because right now it's worth, 1.8 to 1 on the Hex, and it's only earned about 10%. So it's at like that kind of like, 70% premium. When it's midway through, the stake may have earned 3 Hex per Maxi by then. And so that rebate could be very lucrative. And then having that like lucrative one-time payment back to stakers, that could introduce, a lot of buying before that year, leading up to that year. We may see craziness in the price. And again, we've covered that kind of cycle that happens where, like, if price goes up, maybe some people are willing to early end stake. Early end staking can lower the price a little bit if they're selling to the pump, but then it also reduces the circulating or the total supply of team. So now there's less team to be staked and less team competing for the stake rewards and less team competing as a seller. And so it can kind of gear up it can amplify the next bull cycle. And so having these like one-time big payout events what I think might happen is that during those times we may see crazy price volatility, and then also big decrease in the total supply of team just due to early end staking. So though, like that one-time payout, one's, just to kind of, give back to the people that minted, but two, just to like introduce some volatility. I think that was that was it was like the perfect solution for that. And then the burn, that's like also just like an additional like airdrop to the Maxi holders, because now it's like each Maxi is going to be worth more. And since each Maxi is now worth a little bit more, then maybe it makes those Maxi rebates more valuable, and it even further boosts that team, stake rewards during those years, and introduces even more volatility to this team market. So, that's kind of all the thinking that went into how to structure the minting and all, those bonuses and stuff. So that was how all that went. So all that kind of thinking and strategizing, all that was done really in May, because then I got married in early June. So I wrote the first versions of the contracts in May, and then came back so then I was off for 3 weeks for my my wedding, honeymoon, some other weddings, so didn't get too much done. Then when I came back, then I started doing some testing on the contracts. So that was in late June. I started doing some testing, and then finalized fixed a lot of things, really finalized like the stake rules about like you have to stake for 1 year at a time. You only get credit for the entire years that you staked. So those those kind of fine details of the staking rules kind of got ironed out in June. And then then in July, I kind of finalized the contract. Then I went to start doing some preliminary testing. I had some people test it out, and I found some major issues in the staking system. Basically, the contract as it was, it could have introduced like inflation bugs, and the rolling forward and the staking like new hex was kind of convoluted, and it was very confusing from a user's experience. Like a user would have had to like really deeply understand the staking rules and just kind of how it all worked, and it was just kind of a nightmare. And so that was in mid to late July when I was like running that test on that first version of the contract. Before, because we were planning for like the full public test, and so I was doing like a little preliminary test just to get ready for that, and I found all these issues. So at that point, I basically rewrote the entire staking system. The staking system got a full reboot. That was like mid-July, so mid to late July, then through early August was when I was rebuilding the staking system, entire new reboot. And so I'm really glad that happened, because one, the staking system became so much simpler from a user's perspective. And then two, it added some kind of new, like the dynamics of the rollover that was greatly improved from the prior version. So early August was when kind of like the new version of the team staking contract got finalized, and then it was so much better. I'm so glad I did that iteration on it, instead of like just trying to fix the problems with the original staking system. I entirely rebuilt it, and I'm so glad I chose to do that, because it's so much better than it would have been. Much simpler for a user's experience, much simpler even from like building a UI to make it easy for someone to manage a stake would have been a nightmare on that. Like it would have been so difficult. And so across the board, the new staking system was so much better than it was. And then so whatever day it was, we did this public test phase. It started like a week ago now. So yeah, I just finalized the contract, started this test phase, and then sent the contract to the auditor, and then now we wait. So So it's really been a hell of a ride over these last couple of months, you know, with Maxi performing how it has, just getting Team and the perpetuals ready to launch. I think, and even a couple weeks ago, because originally, if you guys remember, it was only Team and base. The original plan was only to do one stake. And then when I was building the part of the Team contract that deployed the base stake, I was like, oh, wow, I could, like, why not just do more stakes? And so we introduced base, trio, Lucky, and Desi. And then we, you know, just so a lot of things with the contract really came together in the last month. And then so far in the testing, everything's working great. The audit, they said what made me feel good is the auditor said, they're like, this is a very clean contract. The documentation is really clear. This is much better than most of the contracts we look at. So that made me feel good that, you know, that we have this contract, because that's a big part of it, you know, right? Like if you're building trustless, you know, consumer facing financial products, it's only trustless if a user can reasonably understand what's going on and like reasonably read the contract and make sense of it. And so like the simplicity of the contract itself is actually like a main like user benefit that I take a lot of care in creating, because you know, it's not trustless if a user can't reasonably audit it themselves. Like if they're having to rely on an external audit, like, you know, the audit that we're doing is mainly for me. It's not so much for the user, even though the users do take that as a credibility boost. It's more for me to get that confirmation that that it works how I you know, how I intend it to work. But you know, for users to ensure that it's trustless, I think it's critical to make the contract so simple and so readable that a user can look at it, you know, spend an hour reading through it and make, even if they have no experience in Solidity, where they can read through it and you know, check for themselves that there's not some like admin key that can pull the rug. Check for themselves like how the staking works. You know, prove to themselves that like you can't just mint more coins whenever you want. So those things I took a lot of care in. And then now, you know, the audit will be done here in just a couple of days, and it is go time. So we'll be announcing a launch date soon. You know, because when the way it works with the audit is that they produce a report, and then from that report they're going to give me things. There's going to be like high priority things that need to be fixed, medium priority, low priority. On the Maxi one, the things that they gave me were just low priority, and so I'd fixed all those. Then I sent it back, and then they update the report. So, but this time around, I'm hoping there's not too many low priority ones, because all the low priority things that they told me about in the last one, I made sure to factor into how this one is designed. So hopefully there's not those, and hopefully there's no high priority things that may take more time to fix. But as soon as, you know, that audit comes back, and then we make sure that all of the things that they point out are fixed, or we make sure there's nothing that needs to be fixed, then you know, now that the front ends are done, and all I have to do when I launch is just paste in the contract address. Like that's all I do is just paste the contract address into the dApp, hit deploy, hit commit, and it's there. So so those ones are ready to go. And so basically once the audit comes back, there's really nothing else standing in the way. And we're trying to get this out ASAP to save hex stakers from giving money away that they don't need to be giving away. So we're very close. Oh, look at that. RH Max, good friend of mine. Hey, thanks for not doing another meme coin. Yeah. Not to say we won't ever, you know, but at least now, and even that, you know, like imagine what our meme coin could be, you know, like not just like copy paste, like, oh, fixed supply. Like, okay, look at these dynamics we're introducing with team staking and with perpetuals, and, you know, so not to say we, you know, but, you know, that wouldn't solve it. You know, the perpetuals are a massive solution. Meme coins, like they try to justify it by saying it's a marketing technique. And so in order for that to be a marketing technique, the amount that it needs to bring in needs to be greater than the amount that it dilutes. And so that's like always a hard chasm that has to get over. You know, but yeah, we're not just like launching a coin just to promote our own brands, and that's really what these meme coins that people are launching are. Which is, it's fine. That's speech, and that's that's art, and that's and that's their choice. And so I really don't have a problem with people doing that. It's what markets are for. But yeah, like I'm more interested in creating real solutions, and that's really what these stake pools are. So yeah, but not to say at one point, when Team runs up 10 million X and the perpetuals have sucked in all the hex on Earth and all hex is staked through Maximus stake pools, maybe at that time we may launch a shit coin. Who knows? Making a real product. Yeah, we're building real solutions here. Yep, our brother. Sweetie says, I like that split. You wouldn't have it. Maybe it's meant I wouldn't have had it anyway. You wouldn't have had it anyway. Yeah. The amount that you're paying to Team is money that you wouldn't have got without Team. So it's like just like any other sales commission. It's like you buy something because you got more than that amount of benefit from it. And it's just like the same thing. MT Corner says, what's up, Dipcatcher? Keep up the great work. Thank you so much. I really needed to dive in and catch up to what you guys have been up to. Summertime is hard for me to keep up. Yeah, so just watch that video. I played it here on the video a couple minutes ago. Just go to Gold Key's YouTube channel and watch the 5-minute Team and Perpetuals explainer. That's all you really need to know. So thanks for joining us. Oi, oi. Name says, Maxi locked up 50 million in 14 days. How much do you think the Perpetuals will lock up in 21 days? Yeah, good question. Because a lot of hex has ended stake between now and then. A lot of hex did get soaked up into the Icosa stuff. That puts a damper. And I hate seeing all those solo stakes because it's basically just giving money away to whales or giving money away to ETH stakers and giving money away to Hedron, the big Hedron whales who are just the big hex whales. So it's good for the hex whales. I think that hex would probably have been better use, but that's people's choice. That's their head. It's not my keys, not my coins, not my choice. I fully support people making good choices, and it's better that they, if you're gonna waste your hex on something, at least it's a good quality product like the Hedron Icosa stuff. So, that's, but I mean the value proposition of staking in the perpetuals is massive, and I think that with the success of Maxi, people kind of see that. So yeah, I think that these perpetuals are going to have a really big minting phase. Some dope stuff. That's right. Team, etc. will be copied on Pulse Chain as well. Yep. Yesterday I did a whole video on what happens when the whole Maximus ecosystem gets copied over to Pulse Chain. And long story short, all hell is going to break loose with all these token pairs. And so that's going to be exciting. Yep. Dahlia says, cool jersey. Thank you. Probably more gas efficient that way too. Yeah, whatever you're saying, probably yes. That it, like everything, that's like a main consideration in how I design a lot of this stuff. Fido, 5-year perpetual pool for those of the dog coin itch. Did Name just introduce a new pool? That's a really good idea. That's an awesome idea. That's a good idea. That's a great idea. That's a great idea. Oh my God. Did Name just give us an awesome new idea? We'll see. Why not launch a crap token? You fixed everything, bro. That's important. Yeah. I still don't know if I swap all my Maxi Team. I make calculations, and even with all 150 million staked in each perpetual, holding Maxi with the burn is much more worth it. Well, so if you do that, so here, let's look at the numbers. So I guess the way that I approach when people ask me this, and they're thinking about like comparing the yield from Maxi to the team from the pools. So the like that disregards just because like the total value of the team is the value of the is like the value of the yield, which is in hex, and then the value of the team itself. And so there's kind of two parts to that. So you can't just like directly compare the yield to yield, but there's a serious chance that the yield from the sum of all the pools paid to team becomes greater than the max yield. And it's totally unpredictable because it's based on, pool participation over the years and how much that grows. And there's other things that factor into it. And so, but just from like this calculation alone, so here's what, with this one here, I only did this for the base stake, and I factored in the share rate increasing from, there's a site called hexfire.io, and I was talking to him, and he built something that I've always been wanting to build, but I just didn't really know how. He built this share rate model, which calculates what the share rate is going to be in the future. And the way that he calculated it is very good. A lot of people calculate it by just like applying some growth curve, which doesn't work. Like the share rate is a result of the oldest, longest stake that ends each day. So, so he made this, and I actually really liked it. And so I built this model, because the original model that I built was right here. That this is all over the place because I was doing all kinds of other stuff with this. But the so just with the base stake, considering because the share rate grows with, share rate only goes up. But then also, if what this model includes is, and this is a initial principal there, so let's do initial principal of 150 million, like you said. So what this model includes is, here, let's zoom in just so people can see. So what this model includes is that, the share rate growing based on his model. So these numbers are probably going to be pretty accurate. The daily payout per T-share growth rate. So I did the 3.69% because that's like the underlying stake, or the underlying total inflation rate, and then like the pool, that's like a top line driver of the daily payout, is just the total number of hex, because daily payout comes from the inflation. And so I put 3.69% because what that assumes is that that like the share replenishment rate is 0, and and then those are meaning that the same number of T shares are created each year, or like as shares end, new ones take its place. And so what that means is that people may not be able to retain these because the share rate becomes more expensive. And even though and so people may not even be able to, and this share rate increase is mainly driven by pre-big payday stakes. So, and there is, and what he even pointed out in some of his data is that there's a point where you cannot possibly get more T shares. Because like right now, if like you have a 2-year stake that ends, you can take all that hex and principal and then stake for like 3 years and then get the same number of T shares. So there is a point where you can't. So, and that's that T-share deflation that comes up. So, and that's what can drive the increase in the payout per T-share. So that's an insight that this guy introduced to me, that just by looking at the Hexfire data, that really helped me get a better understanding of what these are going to be. And so assuming like a payout per T-share that grows just as a result of just the total supply growing and then shares being harder and harder to get, that's what I factored here. And then also I have this pool onboard growth rate, because that's a big unknown here. Is it like, if you're in this chart only shows base. So, with the others, we'd have to make a whole another one of these. But for the base stake, say, it's 150 million, and that's just during this first, pool minting. So, that this is assuming that the net growth of the principal from year over year is going to be 10% plus the earnings. So you see how it says H4, so the end value. So that's like all the principal and then plus 10% of that principal. So like as if these pools are growing by 10%, like so 10% new net onboarding into these pools per cycle, meaning that, that it like the end value grows with new, people redeeming, but then new people being onboarded by the team members, or just, now there's a new stake you can join. All your old stakes, you now have liquid hex, you can now participate. Just hex user growth, hex staker growth, all those factors. So, these are the numbers that really dictate it. So with like a 10% year-on-year principal growth rate, just from the underlying earnings, plus the, the growth of onboarding, and then that's just like the stake days. So here with the, over this period of time, so if you were to stake during these 15 years, you would get, this 5 point, let's see. So this right here. So it's J20 plus K21 plus L21. So even with just like the base stake, like paying like the hex per team staked, the total hex value of this, assuming the, like, so, these maxi per team and then the hex redeemable per team. And so this is calculated based on, based on these payout per T shares and the T shares from the maxi stake, how much hex is each one of these maxis going to be? And this one includes the, the burning. So including the burning, like it's just, and this is based on, whatever the participation is. So the percent maxi minted. So if 20% of the maxi is minted into team, and if 40% of the team is staked, so that's like, so what if the mystery box never stakes and then 8% of everyone else stakes successfully on average in each of these years? So under those assumptions, the maxi per team could be as high, could be as high as 0.75 maxi per team, right? And if that each maxi is worth 6.8 hex, just the maxi rebate alone with those stake with that stake percentage could almost be what the maxi would earn. Because like there's a threshold where if the stake rate is low enough on team, then you get back your entire maxi if you were the one that staked during the years. So just from here, just from the base stake alone, while these earnings, just like the hex yield, it's not massive like maxi is. The maxi rebate, I mean, the hex yield is great. The maxi rebate could be greater, and the hedgerin also, which it's earning, and this assuming the current, like the average hex per hedgerin price. So this right here assumes that hedgerin's going up just a little bit versus hex, and still it's not very much. Like just from this, from these numbers here with that 150 million initial pool, assuming that team does its job, then base alone could get, base alone plus the maxi rebate could be getting, 5.9, which is pretty close to that 6.8 that maxi got. But then that doesn't factor in, the value of the team and how the team stake rate. So it's very hard to estimate what it's going to be. It is very unpredictable. And this is only considering base. Like this isn't, I haven't even made one of these for the other pools, and the other pools that don't exist could exist. So it is kind of hard to really compare like head to head the earnings. But again, that's totally your choice. And, by you not participating, then as more and more, not you, Lucita, but just a person that holds Maxi by not participating, that's actually really positive for all the people that do, because one, that's one less person and one less team that could be competing as a staker. Two, it's more dry powder to drive the team price up once reality sets in, like, oh shit, like maybe team is going to earn more than Maxi. Is it too late? And so like there's more dry powder to get into team later, which pushes the price up. More minting doesn't push the price up. And so, it is and that's the whole point of this. All of this is that it's a very tough decision, because we wanted it to be a very difficult decision, because it makes it more likely that a lot of people make the wrong decision, and a lot of people making the wrong decision and then having to buy later to make up for it on the right decision. That's what can drive like 10,000x team price performance. And if team price goes up 10,000x, what do you give a shit about the earnings, And so, that your question here and this right here, like making it a very difficult decision. Even though, I mean, I don't know, when I run the numbers, it's kind of not a difficult decision. But everyone should run their own numbers and come to their own conclusion. Don't take there's a reason why I'm not really publishing this spreadsheet, because like these are more for me to reason about it and understand the system. But I recommend that everyone should make their own spreadsheet and do these calculations and then come to your own conclusion. But this decision was deliberately made difficult for this exact reason, is that like it just adds uncertainty. Uncertainty means volatility. Volatility means opportunity. And yeah, it's like, we holding Maxi is an awesome option. And we hope that you hold Maxi till the end, because that boosts the value of team, right? Because team from that Maxi rebate, a part of the value of team in the first 10 years, it comes from Maxi. And so we want a lot of people to hold and hoard their Maxi, right? And so, because that boosts the value of team. And so, there's a lot that goes into it, and the yield is part of it. But the biggest returns from the team, if they happen, are going to be if there's a lot of demand for team. And so, and because it's a fixed amount supply, potentially infinite growth, potentially infinite income from the, what if this pool onboard growth rate? So let's do some moon math here. What if the initial one is, 150, what if let's just say the initial moderate moon math, let's say it matches so Maxi was about 300 million, 294 million, let's say 300 million there. And what if the team stakers just go on an absolute tear, and then team is like a mega growth factor for Hex? And say like every year we're growing by 26% on these pools. And then say, same Maxi minting, same team percentage staked, just from base alone, it could so this total Hex, this column is from base, the larger those pools are, the larger that this could be. So even from that, it's like, if we bake in some moon math, it's not even moon math there, right? Like 300 million, that could happen. And people could get really aggressive in onboarding. And like, what if someone just like finds that niche, or just finds that pitch, that marketing message that like onboards a lot of people at a Hex through these pools? So, it's like, it's impossible to predict how these pools grow over time. And that's what really drives those, that 15-year calculation, which is impossible to make. But, there are reasonable assumptions that you could make that would put just the base earnings alone above those. And then factor in, because this is 15 base stakes. Now we have, in that time, we will have 5 trio stakes, 2 lucky stakes, and 1 deci stake. So, and then who knows what other magical, mysterious things may suddenly be earning income into team. And what if team prices is pumping so hard that the stake rate's very low? Because this is like assuming that that 40%. So just imagine that the mystery box isn't staking. And then, so this would mean that 80% of everyone else is staking. What if if the team price is pumping so hard and causing people to early end stake, that percent team stake goes down. And that means the earnings per people that do stake goes up. So like, it is very, because there's so many things that factor in what those earnings are. It's very hard to do a head-to-head comparison, and that'll be one of those things that the answer only comes up after the fact, and it's deliberately a difficult decision to make, because that basically just introduces future buyers. Because like, think about this: if everybody just went all in on the minting, it would be very difficult for everyone to experience positive performance. If only some people go, all in on the minting, there's a lot more dry powder on the sideline, a lot more people that knew about it, learned about it, chose not to. Then they get that feeling of regret and FOMO. Like, that's kind of a hidden pumpamental in the whole system, is that that decision is very difficult to make. And, it's, and then there's so many, unknowns that it's even harder. And so that's kind of what I think about it. Taking account that a lot of people are swapping their Maxi to Team, I think more than 30% of people will swap for sure. Yeah, I mean, who knows? I mean, the hedge fund deployer just absorbed a lot of it. They have like 10% of the Maxi now. What do they do with it? That's a big swath of it. I think a lot of the smaller players will, probably, because people that have smaller bags, it's like they're looking to take on more risk for higher gains. And since like the pools themselves, and even just holding Maxi, like it's basically the hex price times how much it earns. So it has capped upside. That's like the cap on the upside of the pools. The team really kind of has uncapped upside. So for people that are willing to take on more risk for that uncapped upside, I think a lot of the smaller Maxi holders will, but maybe some of the bigger ones maybe won't. But that's good for everyone else. So it all just kind of reaches an equilibrium. Like I feel a lot of zen with how it all balance out. It's like, okay, if a lot of people mint, it's great. If a lot of people don't mint, it's also great. Everything in between, it's like everything's just great. Like everything is just perfect. So that's just kind of how, like, it all remains to be seen what happens. Taking it and staked at the end of the year, like 67%. Unlikely to do less than that. Yeah. So, if we have high stake rates in Team, and each year there's like a new income period, and like people that want to get Team, they're like, oh shit, like this Team is earning a lot of hex, and the Maxi that I kept is earning a lot of hex, but it's not much more than Team, and the Team price just went up 100x. Fuck, am I too late? Like, and then they're wanting to buy, and then as people buy, then the might cause more people to unlock. Now that Team staker rate goes down, the payouts go up. Now everyone's like, oh shit, look how high that payout went. Like, so you never know. It's gonna be crazy, and this is all speculation. Like I have no insight into what happens. This is all up to the participants. C-Square says, if you're a hex whale looking to get a sizable position in an existing Maxi or perpetual pool, how would you personally go about it? Limit order, single-sided liquidity position on UV3? Cheers. Yeah, so probably the single-sided liquidity position, and then you have to remove your liquidity once you get filled. So it would require some strategy. So that's probably it. Probably a limit order like slightly above the current value, maybe. So limit orders are like, at least with the dexes, the limit orders, it's like the price has to go down below, at least from the limit orders that I'm familiar with on 1 inch. The price has to go so far below your limit order that like a arbitrage bot needs to like fill yours, and then that's how you get like the free limit order done. So like if the price is already below there, you may be able to just scale in with market orders, but yeah, it's like probably a combination of all of it. A combination of market orders just to guarantee your allocation, limit orders that just kind of get you filled, but that requires price to go down, and then single-sided liquidity that, will get you filled and you'll earn a little bit of fees, but then you have to do some active management of your position in order to get that. So he says, I really hope few people swap their Maxi for Team. Just make it look bad in Twitter, like Team is bad, don't swap. It's just a meme coin. He's so smart, and few people swap it and get rich. Yeah, I mean, if you wonder why a lot of people aren't really hyping it up, a lot of people that are following along, that may be a reason, because they don't want you to dilute them. So that's a very realistic scenario. Lucito asks, I understand how you can add new perpetual pools in the future. Is the contract open so you can change stuff in the future? So the contract is not open for changing anything in the future, but the way the contract was designed is that, here, let me just show you in the code. So these perpetual pools, so say we decide to launch new pools. All we'd have to do is just click deploy, and then there's this variable in the constructor here. So passing the how long the minting duration is, how long the stake is, how long the period is in between each stake, then team address. So this is the address that this, during the end stake hex, when it calculates the bigger pays better bonus sharing amount. Let's zoom in. We calculate the bigger pays better bonus sharing amount, and then it transfers to the team contract address, which is what we passed in there, that amount. So any new pool that we may or may not, no expectations, assume that I just drop off the earth. But what if we decide to, what if we take name's idea and launch a 5-year dog token called Fido? Even though the team contract is what deploys base trio Lucky Desi, we can always deploy new pools, and then we pass in the address that it pays part of that bonus sharing to. So, and then we can always launch new pools, and that requires no change to anything with any current existing contracts or pools or systems. So that's how we may launch a new pool, and then also the way that the team contract is structured, we have the way that the rewards are taken is that at the end of each staking period, so at the end of the base stake, this is a function called prepare claim, and so it checks to make sure that it's not a staking period. So it waits and it gets the latest staking period. And then what it does is right here, this value period and balance of the ticker in the latest staking period, it takes the contracts balance. So right here, it says IERC20 supported tokens ticker. So this is like just like the default ERC20 token, like when you go to Etherscan, you look at any ERC20 token and you look at the functions, there's a total supply, or there's a balance of. So what we're reading is the balance of the team contract. So the hex balance of the team contract address, this is the team contract address. So if this is hex, we are reading the hex balance of. So no matter where the hex comes from, all the hex that gets deposited into the team contract address during that year is allocated to the stakers. So no matter what the source is of the hex, it's equally divided up amongst them. So there's no active, nothing changes about the team or the pool contracts in order to create new income streams. So that was how the whole system was designed, was that, any new hex income stream that mysteriously appears, it just fits right into the existing stake reward model. And then in that case, those stake rewards go up, and then the market may factor in, okay, now team on average is earning this amount per year. What does that do to price? What does that do to stake rates? What does that do to, all that stuff goes on. So to answer your question, nothing can be changed on the contracts, but new contracts can always be deployed. And the team contract itself doesn't really it doesn't differentiate where the hex came from. It's just all the hex that arrives in the contract at that time is calculated, and then it is then it's transferred to the stake reward distribution contract. That's where you claim your rewards from, and then it updates the values of, period redemption rates. How many of that token, how many of that ticker can each staked team claim? And then you go to this team, the stake reward distribution contract. And when you claim your rewards, all you do is you prove that you prove that this team token get claimable amount. You run this function, and that proves how many team you staked during that period. And then it simply sends you that number times, and that's what this claimable amount is, tells you how many that your amount is claimable for. And then you prove to this stake reward distribution contract that you staked successfully in that period, and then it sends you your rewards. So any new source of hex can just go right into that. Must be the best if the bot says so. What? Oh, is that? Oh, it must be talking about those people trying to get you on those adult dating sites in the chat. Simple question. How long do we have to mint team, and then how long for the perpetuals? So as of now, the minting period for all of them is going to be 21 days. We are thinking about extending the Lucky and the Desi pool dates, but we're probably not going to extend the length of the first two, because with shorter stakes, every day that you're not staked is a larger percent of the total earnings. So every day that goes by is like a day lost pretty much. So whereas with the longer stakes, adding a couple extra days or weeks isn't impacting that by very much. So we may extend those. That's still to be determined, but at least 21 days for all of them. You're amazing. Seriously, team, it's genius. I started to see it for what it is, and I'm not changing my mind. I will swap all my Maxi for team. What? You will not change your mind, and I will swap all my Maxi for team. Thanks a lot for your explanation. Thank you so much. Yeah, thank you for the great questions. Like, these are important things to discuss, and I'm very happy to have had you here with me today. Yeah, the bot. Oh, who's having a good day? Oh wow, look at that. Okay, here, let's change. Let's stop that screen share. Got some awesome stuff on Twitter. We have Arch Max saying, "Is Maximus DAO, Maxi with Tanto and Golki the only Hex Pulse Chain community project that make new coins but didn't do an actual sacrifice phase or ask you for money? Only swaps? It seems like a great anti-scam pattern." Yeah. So I didn't participate in any of the non-RH sacrifices, and part of that is because like it sucks, and even that I didn't necessarily like. I actually wish that rather than doing the sacrifice, where it's just like you get these sacrifice credits that are factored in after the fact. I wish that the Pulse and the PulseX sacrifices issued a token on ERC20 that you could then convert later on. That's really what I wish it would have been, because it would have set a much better standard for some of these. Because some of these sacrifices that happen, I'm not even going to name them. I doubt they're even going to deliver. You gave up your hex and you didn't get something to get a copy of. You have these sacrifice credits, which if Pulse Chain launched, you're not getting a copy of those. And so it's like upfront money grab before anything is done, and you can audit anything. And I would never ask anyone to do that of anything that I would build. So like, to me, like kind of the personal standard for this type of stuff is that it's much better if you're going to mint tokens. It's much better that it's a completed product. Like it's absolutely like a no-brainer to me. Like, and some percentage of those sacrifices are not going to launch because do you think they're qualified to launch? Do you think that they have the capacity to build and launch the product? Or are they going to have to like hire that out? And then like, I don't know if you've ever hired software developers, but their first try always doesn't work, especially if they're not like subject matter experts. Like, because there's everyone's like, oh, like, can you code my app? Can you code my app? And it's like, yeah, but like your app's not going to be good unless like a subject matter expert is creating it, right? Because then it's like, is the develop? Because like a lot of like the process of building these things, it's like, I went into it with the design criteria that I was going for, but then over time, I had to like make adjustments and make decisions on the fly regarding like how things were going to be structured, how it was going to work, and how edge cases would be resolved, and all these things that like, if you just have like some outsourced developer overseas, or I mean, not overseas, anyone all over the world can produce anything, but like if you're outsourcing your development to someone who's not a subject matter expert, who doesn't have that, that like secret sauce, then one, like what's stopping that person from like being like, okay, fuck you. If like I can build this from you paying me, why not I just build it and compete with you? Because like I already have a leg up on you because I can build this. You can't. You're coming to me to pay me to build it, and so they already kind of have a leg up competing head on with you. And then also, if you're the subject matter expert and you have to pay someone to build it, then it's not going to be as good as it was if the subject matter expert is building it. And so that's why I think a lot of these sacrifices are the problem they're going to run into is they think that you can just find a coder. Hey, code monkey, come write my code. Here's my massive idea. It's going to be awesome. Here's all this money I just raised, but I'm going to keep most of it for me. Here's break off part of it for you. And then what? How good is that product going to be? So, that like I think it's a bad idea to be sacrificing for things that don't exist yet. And so that's why my products, you mint your coin in real time and it's a finished product. So yeah, he's right. Let's see if anyone said anything. Hexinfo and Hedron also didn't ask for money. Yep, that's true. And look at this fucking block. Yeah, so I thank you for mentioning that. RH, that's a really important point. Pulse D didn't ask for SAC and his free money. Yeah, it was. Dump mine at 4.269. Nice. So true. Only had 200s, just paid the rent and bought more weed. Get off the damn weed. I used to love weed, but honestly, I may become very anti-weed. Who knows? I think it's better than just about any other thing you could do, but and I think it can, it can help a lot of people, but I think that most people probably shouldn't be smoking kush. But that said, if I was to commandeer the government, I'd probably have very strict anti-drug and anti-alcohol, anti-tobacco laws, but I may require marijuana. And the mandates would be very similar to any like vaccine or mask mandate you might have seen. If you want your kindergarten to go to class, you got to smoke pot. If you're a doctor or a nurse, you want to keep your job, you better hit the blunt. You want to get on an airplane, better rip that bong. You better show proof. Your vaccine card is going to be, you got to show up with the red eyes, just like. I'm just kidding. Oh, that's funny. Lucito asks, how much time do we have to restake team for the next year? And when can we do it before the year ends? I hope you understand my question. I'm Spanish and it's a little hard for me. Okay, yeah. So so here, let's pull up this can kind of show you. So I guess I can't show you here because I've already here, I'm gonna just so I can answer your question, I'm gonna end stake part of mine. So let's end stake 1,000. Actually, I don't even know if this will. Let's see. So we should see this number go down to 3662. Yep. Okay. So actually, this is probably just going to add to the stake, so I won't even be able to show it. Shoot. Okay. So I can't show it there, but the way that so you have, if you're already staked, you have the whole year to roll into the next year. So like I said, the base stake is the calendar. So the team staking year starts when the base hex stake starts. So you have the whole year to roll forward. So at any time during the year, you can roll forward. So you don't need to like rush. Originally there was a 7-day window you had, but that was a bad idea. So we fixed it and made it so you can always roll forward from a current period into the next one. So you have a whole year to do that. So if you're not at your computer or something for, when it ticks over, you have time to plan ahead. Hexen Wrestler says, just watch Gold Key's new video, short and sweet. Thanks, team. Yeah, is awesome. He made an awesome presentation there. Well said. Yeah, too many sacks with anonymous dev. Yeah, way too much of that. But I mean, that's also people's choice to participate, right? And not my keys, not my cheese. I can't control what other people do. I can present them. The way I do fix that is I present them with better opportunities. So, and for the people that already sacked, that wish they had their hex that they put into whatever bullshit they sacrificed for, and now they have that FOMO and regret. Like that's just that's how people can learn. Is it like they're like, oh shit, I sacrificed for this thing, and Pulse Chain's delayed. They said they're going to launch the Pulse Chain, but I don't even think they're going to launch, and now they're just wrecked. So that regret is what teaches people, and so that's really like my duty is to everyone is to just present better opportunities. And that's even like kind of out of Richard's playbook where he like part of what motivated him to build Hex was that he's like, okay, people are getting scammed with bad ideas, legit scams, whatever. The only way to counter the scams is to produce competing products that are better. And so that's what we're doing here with Maximus. I have a feeling that Hexing got spammed with some crap coin devs, and that's why so many sacks. Be careful. Yeah. I mean, since the really high price performance, it already made the Hex skins a target. Too, because of the big sacrifices from Richard, that kind of like inspired a lot of people. And then some of the other big sacrifices, and then so those people cashed in, and it's their money now. So what can you do? Value brand, proof of token. Yeah, when we have the marijuana mandate, you better hit that blunt or else you're not getting on the city bus. Everybody already sounded like a word salad gibberish on Twitter Space. Yeah, I mean, that's what the NFT crowd sounds like. They're stupid. I mean, I love, just don't get me wrong. Like, I love bullshit. Like, I love just dumb shit that people speculate on. Like, because I think that's a beautiful thing. I think that it's like a beautiful expression of freedom, and just like a testament to like how advanced, like, humanity has come. Where we came from the sludge in the swamps. We wiggled out of there millions of years ago, and then after millions of years of trial and error, here we are today. And you can speculate on fucking pictures of ape on the internet that sell for millions of dollars. Like, that's actually incredible. So like, I do love dumb shit. Like, I really do. And like, and when I sacrifice to support freedom of speech, I mean it. Like, and so meaning it means that you support people to express their views with their money in whatever avenue that they want. So like, I fully like, it's like, yeah, I'm kind of shit talking the, you know, like the dumb stuff that the NFT crowd does and all these dumb sacrifices, you know, but I absolutely support people's right to choose what they want to take risk on. So, but yeah, the NFT crowd is just like, they're just kind of just, oh, we're going to mint the NFT and it's going to be redeemable for these game things. And you can unlock rewards and you can get into this airline, this airport waiting room, and you can get free stuff and there's utility and you can yada yada, and then throw in some like, you know, like decorrelated, like just random buzzwords, and then they're just like real art and just, I don't know, just dumb shit. It's legal here in Oregon, Washington, California, also cheaper and better in Oregon. Pre-rolls, no dirty paraphernalia. Is it the other way around? Because then you're getting that paper. I don't know. I don't think it's good. Probably stop, to be honest. People love to sacrifice for anything these days. I'm a tonto on this. I did not sacrifice for anything else besides RH projects and products. Yeah. Yes, they're stupid. You're not wrong. They're also unaware of HSI NFTs as real active value. Yeah, I mean, you know, in that case, it's like the value isn't the NFT. The value is the hex stake, right? Like, so it's, you know, they're, you know, it's using the tech, but it's really like, okay, do you have an ERC20 token or an ERC721 token? And that's just the only difference. Like, so it's like, okay, what does ERC stand for? Ethereum. What does ERC stand for? What European Resuscitation Council standard did you use? What Employee Relocation Council did you what does ERC stand for? Ethereum. What Ethereum request for comment standard did you use? Like, that's the only difference. So it's, you know, when they're talking about the NFTs, they're not talking about the stuff that the HSI is. Quit spamming the chat. No one wants to go on your dating site. We're all married here. Block. Just a bunch of promises behind a worthless JPEG. Yeah, I mean, it's just they all fit into that promise coin space where, you know, because I mean that's really what they are. It's like the way I view NFTs is that they're, you know, like for instance, because I mean I've participated in some NFTs. Nothing that, so the only I talked about it yesterday on stream. That Unisocks thing I was talking about, because someone asked, they're like, do you do stuff outside of RH ecosystem? And the answer is yes. Like I said, I love dog shit and I love taking risk. I love, you know, learning about different areas of crypto, like a lot of stuff that we factored into, you know, how team works, how the pools work, everything. It's actually very inspired by some random shit that I've done. So if, like, for instance, the whole like redeeming your hex, like burn the coin, redeem the hex, that only occurred to me because I had held Unisocks in the past and had higher percent gains from Unisocks than I had from Hex. Say that way less money put in at the start, but things like Unisocks were like, you know, that whole like redemption model for that. And like, that was kind of NFT, digital collectible related, you know, so that's kind of different. But, you know, there's some NFT things that I've participated in that, like for instance, one is a, you know, and these are obviously not recommendations. These are bad investments. And these are things that I experienced loss on, but, you know, it's very little money. So who cares? And it's more, you know, kind of the excitement of it is why I did it. This, you know, thing called hash masks where there were like 16,000 of these units made. And then you all got a random one. Some had more rare qualities than others. And then they had a name and you could change the name of them. And then over time, the names became permanent. And so there's kind of like this other token that was related to it. So like there's things like that. And the way I view the NFT is that, like, okay, in that one, in hash masks, there's like, it's a shitcoin that has a total supply of 16,000 units, and there are no decimals. So like in Maxi and Hex, in all the pools and Team, everything that I'm building, and in Hex, there's 8 decimals. Hedron has 9 decimals. Most ERC20 tokens, the default is 18 decimals. So like there's all these decimal ranges you can have. NFTs are just like, small supply, 0 decimals. And so that all there are is just like another type of shitcoin where the marketing pitch for the coin is the picture. Like that's just like the marketing is the picture. And then the people that experience the gain are the people that have the rare ones that end up getting a bid, and the people that experience the loss are people that have ones that aren't rare and there's no bid. And so that's just like another mechanism for allocating gains and losses to the participants, which is just different than, with like in Hex, for instance, the people that had the most gains were the people that bought between December 20th and January 20th. Like that window of time, those people experienced the maximum gains in Hex. And then the people that experienced the max losses in Hex were the people that bought at 48 cents. And so in Hex, the gains and losses were allocated based on when you got in. And with the NFTs, the gains and losses are allocated based on which one you got. So it's kind of like just a different mechanism for allocating gains and losses amongst participants. And so there's really nothing, wrong with them. It's just like, and it's like, and what they really show is that there's a lot of demand to lever up the risk to try to get more reward. And that comes with like, very low inflation environment on the macro scale. Also just from people like wanting to get rich, like people want to get rich. And so people are willing to take higher and higher risk. And then that's kind of what how it all culminated with these like JPEGs that produce, high ROI if you hit it right, and then big losses if you hit it wrong. It's just kind of like any other shitcoin you might speculate on. And it's really just like indication of demand for speculation. So, I don't think there's anything wrong with them. And, they're worthless. And the JPEG has nothing to do, like, it's just the marketing piece. Like the JPEG is just the marketing. But they're just like other avenues for speculating. And then some people experience gains, some people experience losses, and there's really nothing wrong with that. So, I do like them. I don't take those investments seriously. And I by no means risk any serious money and no Hex on these, because like, it's like the Hex is the serious investment. That's the real deal. This other stuff is just like learning experience, because some of these things, may help me in the products that I produce. And then, just like the fun of it, trying to be relevant, up to date in the space. I don't want to be like blocked off from new opportunities. I don't want to be blocked off from, just like understanding what's going on, because the people in my life, they look to me as the source for answers in these things. And if I'm just like, even though I am literally like heads down in the Hex world, I do stay open to participating in, not a lot of these things, but just like, something hits me at the right time, right place, and it all works out, I'll buy some bullshit. And, with expectation of loss, but, more for like the experience of it. And, because it's important to learn this stuff, because then how can you be an expert if you don't know what's going on, and people look to me as an expert. And so, I do take pride in that stuff. So yeah, that's kind of how I view the NFT stuff. It's like more steps, just buy some digital stuff, give me Uniswap, and I'm good. Yeah, and that's it. Like that's what I like about like the token based stuff more than the NFT, because literally you could, in the same way that a picture is linked up to a token, you could just do that via Uniswap. Like you could have your JPEG loosely related, stored in some database, and it's just like loosely related to the tokens on Uniswap, and it could just work. Like, and you don't, and then you get the pricing on Uniswap, because like the whole OpenSea bidding model sucks. Like, that's kind of what comes with non-fungibility. Like non-fungibility is not very good for like pricing in markets, which is good for people that the inefficiency it creates in the pricing is good for the people that can cash it in on it, but it's bad for everyone else. And so I like that. I like the fungibility of assets, and fungibility fits really good with the Uniswap pools and the automated market makers. Like that's honestly, I mean, like Hex is a major innovation, but I would say the biggest critical innovation for humanity is the automated market maker, via the Uniswap pools. So the Uniswap, like as a mechanism for pricing in markets, that is critical. 25,000 team. Do you think that's enough to be successful? Dumb question, but need your opinion, speculation. I mean, it's missing the critical piece, which is how much money do you have total, and how much skills and capacity to earn more in the future do you have? Like, because that's really what it comes down to, and like, what's your baseline for success? I mean, I think anything is a success. Like anything that you just you taking the action, and you deciding on your own to take the action, I think is a success. But but let's put that in numbers. So 25,000 team. So what do we say? Say 20% of team is 0.2 times 294, 123, 123. So say there's 58 million team total. And if you have 25,000 of that, 25,000 divided by, say that's the number, and you have 0.04% of the total, that's fine. That's good. That's and if that 25K team earns you, I don't know, say over the course of that time, say you stake for 15 years, and over that course of 15 years, that team gets you back, say, I don't know, 10 hex per team. That may be on the low end of the estimate. Who knows? It all depends on how many other people stake. But if that gets you, if the 25,000 team gets you, what would that be? 250,000 hex. And so at the end of it, you have 250,000 hex, and you have 25,000 team at that point. And say the pools are massive, and then they keep growing, and then what is that team worth? It's all up to you. But any amount is enough, and because the total amount of total team is capped by 2 times the total maxi supply, and that's like the maximum cap, and like maybe 100% of the maxi gets into the team. That'd be something. That'd be crazy. But that's the upper cap. But then the more realistic one is somewhere in between. Your that percent of the whole would be substantial, right? So because what is 25,000 team worth in maxi? So 25,000 maxi is so we know that maxi is like 1.8 hex. So that's 45,000 hex, so times 5 cents. So that's like 20. Yeah, dude, that's a great. Okay, so I mean, I like, if you think about it, like if you put in so $10,000 investment, if that goes 100x on just like the underlying price appreciation, that 10,000 is now $1 million. So if you put in $1,000 in order to hit for the price to be, the value to be $1 million, it needs to go up 1,000x. And so what could happen as the team gets really scarce with the staking? What could happen is a lot of it gets burnt. What could happen? Who knows? What other mysterious things may drive value? I'm not married and 40. No thanks. Hey guys, just got here. How's everyone going? We're doing good. Doing great. Imagine trying to divide the hex stakes and seeds and passphrase and divorce court. Imagine your wife or husband is dumb and their lawyer is also dumb. You're like, all right, we'll split this up here. You have words taco, blue, red, orange. You get the first 6 words. I get the last. That'd be funny. That'd be really funny. If it's on one, yeah. Don't get divorced. Brasology's doing great till you shut up. Question. That's pure gamble. Yeah, I mean, it's just speculation, like anything else. Can you quickly explain how yield gets divided to the team token? Sorry if you already have. I'm just wondering if team is worth it over holding my Maxi coins. Yeah, so the yield gets equally divided amongst all the people that stake team for an entire year. So the base contract is the calendar for the team staking system. And so you have to start your team stake before the base stake starts, and you have to hold it until the base stake ends. And so the total number of team that is staked for a whole year period is the total amount that the yield, which can come from any source. And that yield comes in Hex, Hedron, and Maxi. So Maxi only in years 3, 6, 9. Hex every year. Some years are doubled up or tripled up from, base, trio, lucky desi. And then the Hedron from every one of those stakes too. So all that gets divided up equally amongst the team stakers. And so when you go to claim your rewards, you go to the stake reward distribution contract and you prove to it how many team you staked, and it calculates what percent of the total team staked that you represent. And then you can claim all the rewards from that year. So it's like a pro rata distribution of all the rewards to the team stakers. And then the rewards are simply all the Hex, Hedron, Maxi, and all the other supported tokens that get sent to the team contract during that year. It doesn't matter where they come from, could come from anywhere. All the Hex, Hedron, and Maxi just split up equally amongst the team stakers. Can someone safely trade the Maxi Hex ratio of limit orders and accumulate more of either? Yeah, you could. Brasology is very risky. It could be worth it if you stay 15 years at least, but you could be better off just holding Maxi. Yeah, look. Okay, Luisito, you're there. So, after you acknowledged that, where did Luisito there? After he said, "You're amazing. He's great." I understand what it is. I'm not changing my mind, and then said that people are going to make it look bad. Here you are, fudding Brasology. Okay, dude. I see what you're doing there. I see you trying to eat up more of that team staker pool. Yeah, so a little bit earlier, you may just have to rewind. We actually went through the spreadsheet where here, I'll show you real quick. We actually went through the spreadsheet in which we talked about what those numbers could look like. So here, I mean, from the last one we did, with a medium-sized stake pool with pretty big year-on-year growth rate as a result of, I'm sharing my screen. As a result of team stakers being really active and onboarding new people to Hex via these pools, and then modest minting rate and modest team stake rate. So this is assuming that the mystery box doesn't stake, and then 80% of everyone else does stake. And then under that, the total Hex value across 15 base stakes. And this doesn't include Trio, Lucky, Desi, or any other potential pools that may mysteriously appear one day. It is very reasonable for the base stake alone plus the Maxi Rebate to exceed it. And there's like a threshold. There's like a I've talked about this and I've thought about how to build it, but I haven't built this chart yet. It's not even a chart. It's like a 3-dimensional graph, 3-dimensional like heat map style graph, where like on one axis is the total Maxi minted, on one axis is the total percent of team staked, and then on one axis is the pool size. There's like a surface along there, imagine that 3-dimensional graph. There's like a surface there where everything below the surface the Maxi would have been more profitable to hold, and everything above the surface is the it would earn more hex, and that doesn't factor in the underlying team value, like the team price. Because if you think about it, like even if team is close to Maxi, then that could cause the team value to, you know, I mean, any rewards there that are meaningful to get, that could drive demand on team. And if people are competing for those rewards, that drives the earnings down, but it increases the team that is bought and then staked. And when it's staked, it's burnt and not for sale. And if you do early end stake, it causes deflation on the supply because the supply only shrinks. So, you know, the dividends, that's like part of the value. That's like the like income value, but then that income value also could have an influence on just the underlying team price. So it's kind of hard to do a head-to-head comparison, because with Maxi, it's like the underlying, it's basically tied to the hex price. It's the hex price times the earnings. But then the, you know, a team, it's like not limited by the hex price. It's got its own supply and demand dynamics. And, you know, like hex is inflationary, just about everything else is inflationary, whereas team is strictly deflationary. So, you know, there's kind of two sides to that equation. And who knows what type of airdrops or other things that because I mean, really the way it's designed, anyone can do things that build onto team. That's why we included everyone in this opportunity, is so that, like, what if someone who's a large, or, you know, just what if anyone who's a large team holder wants to increase the earnings? You know, they could build products, they could do airdrops, they could do anything to, you know, boost that. And so, you know, maybe there's someone out there that has a whole bunch of team that, you know, may be incentivized to, you know, produce more value for team. So who knows? But the earnings, I definitely, it's honestly really good, like mental exercise for yourself to, like, really learning about how these different dynamics work, is for you to produce your own spreadsheet, to make your own, because don't listen to me. Like, you should be coming to your own conclusions on these topics, and doing the math yourself is a really valuable exercise. Hey, exposed. Yep. Luisito fighting the bags. Oh, that's funny. You guys are great. All right, guys. I'm so hungry right now. I'm really hungry. So what can we, should I get off? And I have worked. I did not do any of the work. I was intended to work on the dashboards, but I did not. I did not do any of that because I've just been chatting with you guys. So if anyone else out here, let's see if anyone else has any more questions. So, and then let's see if anyone on Twitter has any questions. Prisology says get to work. I mean, basically everything's out. So you missed out on the updates. So just to, you know, for everyone who's new listening, so everything's just about done. So all the dashboards, they're all working. Everything's great. The contracts, they've been done for a while. They're undergoing audit now. So ideally the auditors come back saying nothing needs to be fixed. You're good to go. So basically all that needs to happen is just like just once the audits are complete, all that needs to happen is just I hit deploy and then I paste the team contract address into the dApp, and then everything just works. So all the dApps are all functional, from the team minting, the team staking, the team staker reward claiming, all the stake management, you know, so early end stake, roll forward stake, restake expired stake, or end expired stake. Like all the 4 stake management functions are done. The UI is working just fine for that. The perpetual pools, the minting and redemption just works on the dashboard. So, so the last thing that I do need to work on is just like the landing page that routes everything but that Gold Key is working on that now. So we just need to integrate the, like, you know, marketing facing landing page with these dashboards. And then from there, that's kind of it, you know, like we're right there. And, so yeah, not much else to do. more just kind of some improvements on like the aesthetic of some things and just some like user facing stuff. But everything's just about good to go. And yeah, so we're right there. But I do need to keep on working on that because I just want everything to be ready, go smooth, so that there's no stress and everything is just awesome. So yeah, I do need to get to work. Lucito says, I'm going for dinner. Thanks for streaming. You still always have a great day. Thank you, Lucito. We'll talk to you soon. So let's see, before we head off, we're going to just see if anyone said anything meaningful on Twitter. That's awesome. RH Maximus is awesome. I'm going to go on stream with him. Hopefully around when we launch. Professor Hex says agreed. Yep. Let's see what he said on this clip.
Fido, 5-year perpetual pool for those with a dog coin itch. Did Name just introduce a new pool? That's a really good idea. That's an awesome idea. That's a good idea. That's a great idea. That's a great idea. Oh my God. Did Name just give us an awesome new idea? Fido, 5-year perpetual pool for those with a dog coin itch. Did Name just introduce a new pool? That's a really good idea. That's an awesome idea. That's a good idea. That's a great idea. That's a great idea. Did Name just give us an awesome new idea? Fido, 5-year perpetual pool for those with a dog coin itch. Did Name just introduce a new pool? That's a really good idea. That's an awesome idea. That's a good idea. That's a great idea. That's a great idea. Oh my God. Did Name just give us an awesome new idea?
That's awesome. What a great idea. It really is. I mean, what better is a meme coin that's backed by a 5-year hex stake? So what would a 5-year hex stake? That would be 100% longer pays better bonus. I mean, so we talked about why. Yeah, that's yeah. He must have been listening yesterday. We chose not to do a 5-year stake because that's effectively covered across the 3-year and the 7-year stake, and like more at the same time can dilute the bigger pays better, and so it's just kind of better to just kind of do that. But the concept of a dog token backed by a hex stake, that's a hell of an idea. Well, so I see what you're saying there. So all the other sacrifices definitely dilute hex, but these ones don't because it's just holding wrapped hex. So the hex is still held and it's not being sold. And like, so when you're holding these coins, you're still holding hex. And so these don't have that same dilution. And I don't necessarily, I mean, so they do have an impact. One, because I mean, the sacrificers, if they're taking a hex, they're selling, right? So those sacks were a big source of sell pressure. And those definitely were taking away if they're selling. But then also, I mean, just like other coins that are like fully unrelated, those definitely, dilute, buy pressure if it's coming from the same audience, or if people are selling for those other things. So yeah, you're right there. But also, I mean, that's people's choice and that's the markets, It's like you should have no expectation that people are going to buy the coin that you want them to buy. Like they're going to buy what they want. So it's kind of like what can you do? That's their choice. Unless it requires hex, it's only diluting the bid side. Unless it requires hex, it's only diluting the bid side. Not sure quite what you mean, but yeah, I mean, other competing products do, but I think that these perpetual pools, they don't dilute from from Hex, because I mean the Hex had to get bought in the first place, and then it's staked and held, and then when you're buying those coins, you're buying Hex. So, but he's right here. It's not good to have too many choices. Enough choices is best. Yeah, I think you're right. But also, a lot of stakes coming due, end of the year, new year, and it's very trivial to just launch new coins that pay into Team, and that can happen. Let's see what else people said. Why is it taking forever to load these? Okay, there we go. Hexen, Northwest Hexen says, Pulse needs a system to incentivize non-validator node hosts. There's no reason we should be 100% AWS reliant and physically located extradition countries. Raise the cost/reward ratio to ensure we are uncensorable. Yeah, I mean that's a big like risk with moving to a proof of stake chain in like a kind of a small niche ecosystem like we are. Is that like, who's going to be operating these networks, and like how resilient are they to duress, to technical failure, all these things that could compromise Pulse Chain. That's a very good point. He's building it by paying token each sync node peer, should develop full community support in a sacrifice phase of financial energy extraction from Axiom, looks like a super type project. Having a large hardware network means a stronger chain. Let's just pay those peers to contribute. You want open dialogue, this concept would be a great way to pass the initial hurdles of launching a new coin. So, I mean, I think it's an awesome idea about, trying to incentivize people to be aiding in the strength and resilience of Pulse Chain. So like just paying a token to each sync node peer, it's like, okay, like what is going to drive the demand for that token that's going to make it worth it and make it an actual incentive? And like, if that requires like just people to be buying the token, then it's got to have some other type of like pumpamental or like other type of like, some other reason why there's like net buyers. Because if you're just printing a token out of thin air to give people, if there's not a buyer for it, then what do they care? And if that's the case, if you're like organizing this, then you might as well just pay them directly in a coin that already has that. And so it is a tough problem to solve. It's kind of like that tragedy of the commons. But hopefully just the validation incentives help with that. But yeah, I mean, that's a tough problem. I mean, all this proof of stake things you're going to have to do. That's why proof of work is so good. And I even tweeted that yesterday. I said, my mind tells me proof of stake good, but my gut tells me proof of work good. And that's how I'm really feeling right now, guys, is that like, especially with the merge coming up, and then like with Pulse Chain, I'm, really like, it's almost like why it's like, if it's not broke, don't fix it type of thing. And like, it's like proof of work has like had years of true proof that it works. Whereas proof of stake really doesn't. Like it does on like some lower value chains where that doesn't recreate the high value that is on the proof of work chains. So I don't know. And the environment thing I think is it's like you're conflating like external desires with like monetary policy and like network operation, and those are like separate. So like to me, the environmental piece isn't a reason to switch the network architecture. So I don't know. Maybe I'm getting cold feet, or maybe I'm just too scared. But I don't know. I get this weird feeling in my stomach about it, to be honest. Sax Huddle says the bid side of the USDC, the ETH to buy with her SAC for less Hex. SAC for with that. Okay, so that could be used to bid. Yeah. So if you're no, I mean the main reason Hex dumped is because there are people that had huge bags that had massive gains that they wanted to exercise. Like that's way that amount of selling from early buyers that experienced massive life-changing gains, and when they wanted to go increase their living standard, buy luxury stuff, buy houses, buy cars, sponsored shit, like that's the main reason. The incremental new person choosing to put their incoming USDC or ETH in other things like that made the impact of the big whales selling worse because there was less people and less dollars there to absorb that. But I would say that the main reason Hex is dumped is because of just big people with big profits to take. That's simple. Yeah, the wait for Pulse isn't in effect, but there are too many things related to Pulse launch that are out there now and not good for Hex price. Yeah, all these things that, yeah, so that stuff is pretty bad. Like the things that like they took a sacrifice in Hex and then were selling it, and then they got bailed out because Pulse chain delay, and there's no way they were going to be ready to launch. Yeah, so all that stuff. Less things to buy, they will be worth more. Yeah. Pleb sacking and buying crap is a Hex. Yeah, I mean, but the plebs only make up such a small portion of it, right? Like the big people moving price, the ones with huge amounts of money, and people in Hex with huge amounts of money, the people that bought early. So like those are the main drivers downwards on the price. People must have limited choices, like lock your money in Hex and get wrecked on other crap. Got to force them into the good stuff. That was happening throughout 2021. Didn't have to dump 95 from all-time high straight. People oversold in anger and fear. Luna Sackers got bailed out. Yeah. Well, I think I'm going to actually, unless there's anyone with any awesome questions, we are going to, I think I'm going to hop off now. Been going for 3 hours and 20 minutes. Had an awesome time with you all. Thank you so much. So I guess recap. Last thing we're really waiting on is our audit to get back. The dashboards are just about done. All the critical pieces are working. So as soon as that audit comes back and we're certain that everything is checked off and that everyone's confident in it, we're going to get this thing rolling. So thank you all for joining me today. We'll have a great time. And I will talk to you soon. Thank you so much.